All right, good morning, everybody. How's everybody doing on this fantastic day? It does appear that our alt season has come. We've been in it for a couple weeks now, and we've got some high flyers. We're going to discuss some of those high flyers. We're also going to look for a trade. Current positions that I have open right now is a long on Pudgy Penguins and then a short on Doge, as I'm just trying to hedge off that long side risk. We caught Pudgy Penguins yesterday. We were looking for it during the live stream, during the channel members only live stream, and basically we were looking for a potential move lower. We got that move lower, and then it ripped all night long, up 20 something percent when I got up this morning. It was a fantastic trade. Doge, like I said, it was up last week, and basically what we saw across the crypto sphere in the live stream yesterday is some alts were running hard last week, whereas some were pulling back. Bitcoin, as we know, was in a pullback week last week. As of right now, Bitcoin is up on the day. It's barely up. We'll revisit this Doge short, but well, here, let's just go ahead and get it set up for you. Basically, what I'm looking at right here on Doge, this is on the Coinbase exchange. So if you're looking at it on another exchange, your levels might be a little bit different than me, but current week open right now is 0.27387. If you do want to short Doge looking for a small pullback, that's the level that I would watch. I wouldn't be shorting Doge looking for it to go back to zero. I would be shorting it for a pullback only because last week it was up. This week it might retrace a little bit. On all the alts that were retracing last week, those are the ones that you kind of want to be looking to potentially position yourself for on the upside. That is, if they make a low and continue to the upside. Now, clearly, we don't know if the alt season is going to continue or not, but the macro seems to think that there's no top in sight right this second, not yet. Bitcoin can still go much higher. I mean, we got a year-end target of about 100 or about 50% on the year, which would put price at 140K. That's pretty close to max as far as targets. It's within reason. Up 50% is a huge up year for any asset, but for Bitcoin, it's not really. The last 2 years in a row that we've had, 23 and 24, both of them closed up 100%. So, I mean, 50% is half of that. We got ETFs this year, more liquidity. Generally, when an asset gets a bigger market cap, we expect price ranges to decline, just meaning we don't expect massive rips or massive dumps once you start getting up in the multi-trillion-dollar market cap, as there's just so much more liquidity to chew through. But right here on Doge, my short entry is currently sitting roughly about right here, 27322. It's just a scalp, and it's just to cover if we see a down day today, as risk markets are both trading under intraday VWAP. VIX is gapping up, Apple is gapping up, but Microsoft and Nvidia are both kind of looking like they want to look down, at least at the beginning of the session. All right, so what was I going to look at? I've already forgot that quick. Let me see over here. Oh, let's go talk about the move that on Bitcoin. Basically, the thing that we saw here. So yesterday when we were doing the live stream, Bitcoin was trading inside of this range right here. And we had a downside hot liquidation zone and an upside hot liquidation zone. Bitcoin was trading up around the top edge of the liquidation zone, but then it rolled over and then it went down and smoked the lows. Now we had a buy zone yesterday of a 116, as that would have put you down under the white hot liquidity, this zone right here. That's essentially where Bitcoin turned around. So you should have been a buyer then, especially if you were in the live stream, because that was the zone that I specifically said I would be looking to be a buyer on for a run above to liquidate the top side. And we've got that move. So in a sense, Bitcoin has done exactly what we were looking for it to do. Here, let me go back over here. This is better. So let's go to the 4 hour just real fast to show you the wedge that it has been creating. This is the pullback that it seen last week. Now we did put in a 4-hour bear flag or a bear trap to the downside, breaking below this trend line. Obviously, it can go lower. There's a large time frame trend line coming in right under. So, I mean, it could pull back as low as that. We did get a slight breakout above and then retraced back into it. So clearly Bitcoin is choppy still. It isn't wanting to run. If we go look at penguins, you can see where we got that obvious break. This is what I want to see Bitcoin do. But like I said, the more liquidity, the more the market cap grows, the less you're going to see moves like this. Pudgy Penguins is a very thinly traded, very illiquid asset. So breaking out here, yeah, it was a 20-something% move. Right now you're trading into day, or you're not trading into it right now. We did trade earlier in the session up to a daily supply zone. This supply zone is from all the way back over here at the beginning of the year when it ripped. So that was the supply zone. So naturally, that's where people are going to want to take profits. You're also going to have people that missed the long. They're going to get mad. They're going to want to short now because they missed that move. So they're going to be looking to short it, and that's probably where they will be looking to put on positions. If we go into the smaller time frame chart, you can see you traded right up there, and that's in a sense where you reversed. So clearly, there was a lot of limit orders to take profit and a lot of limit orders to sell and a lot of limit orders to open shorts, right? So a lot of people doing stuff at that daily supply zone. And currently that's where we got it. So it looks really good. The reason we were looking for longs on Pudgy Penguins specifically was because last week the sellers were in control of this asset. We did see a move on Saturday up to the yearly opening range. I took profits on that trade. I was long, took profits going into it as it was the first time retesting it since we tested it over here. You know, that wasn't that long ago, but still it's a big level, and it was on a Saturday. Saturdays and Sundays markets are usually choppy, so we don't really look for continuation on those 2 days. But anyways, for the entire week, we were unable to, let me go get this and bring it back over here. Sunday, right there. All right, so that green line is your weekly volume weighted average price. And when we tested this level, we broke down instantly and we got a measured move down to the downside target of the week open. And then after that, it came back up and tested that weekly volume weighted average price. And it literally did nothing after that. So almost like it was like 6 to 8 sessions of 4-hour candle closures where the sellers were unable to get that momentum back to the downside. Typically when I see stuff like that, it makes me very cautious looking for shorts, especially in a bullish market, because you're not seeing the sellers be able to get that downside continuation. That leads me to believe that buyers are soaking up the sells. So you've got big buyers stepping in front, stopping or thwarting the sell side continuation. So we wanted to be a buyer at 4-hour support right here. That bearish candle, that was the level that I was long from. Now, we had some chop right here. This is a bearish engulfing 4-hour candle. So it did look like the sellers were going to basically win. We got a bullish engulfing 4-hour candle first, breaking out, closing above, looking good, getting back above the VWAP, and then the very next candle, it was a bearish engulfing. However, if you look at this on the 8-hour chart, it's a bearish engulfing, but it was at one point up, like real close to the close. It wasn't until we got the new candle that it rolled over and started to close under. So this is a bearish engulfing, but it didn't close under this candle's low. So I entered, obviously this wick stopped me, right? I got stopped out of the long yesterday. I took profits. I've been basically just scalping this like crazy, looking for this move right here. So when it went down, triggered me out. I waited for it to get like oversold on the small time frame, and then I looked for my entry and I bought it back. And right here is that entry, and I took it right there. 0.030845, small position. Because when things are moving like this, you got to be very careful. You can get wicked out or whatever. That's a 589% return. I took $200 and turned it into $1,300. Not bad. Now, clearly, I closed that out when we got into that resistance, that supply zone. So going back over here, let me go back here. Going back over here, you can see that that entry's like right in this zone, right in here. So it's a beautiful trade. Now Bitcoin's doing something similar. It's unable to close under its weekly as well. This is why we're looking for Bitcoin to potentially rip to the upside. It did get that close above, and I would have loved to see an upside continuation on this last 4-hour session. We're not getting it now, so it's not going to be as brutal. There it is right there. It's not going to be as brutal, but now we've started a new week. Brutal to the upside is what I'm saying, as the penguin trade, but we started a new week, so this weekly volume weighted average price is no longer relevant. It's only relevant for me to show you literally, look where Bitcoin broke, but down below here, closed the 4-hour candle. There was your downside continuation. But then when you did your pullback, which is standard in any price leg, we look for the pullback. This is where we look to enter the short. So had you entered that short, anytime after Friday, the New York session open, you've sat in it until today. You've got no downside continuation. This was your first lower close, and it came in at Sunday at 4 o'clock. I mean, the close was right near the fresh day open today, the fresh week open, which is now. So that was finally when you got your continuation candle. But then that was instantly retraced. So you're not seeing the sellers be able to continue with that pressure. That is more bullish, especially when the major markets are all up. Like the VIX is trading under the yearly opening range still. So the markets are all positioned and structured bullish. So we want to typically be a buyer whenever we're seeing the seller's inability to get that downside continuation, right? Now, with that, all that being said, clearly this looks like a rejection, but maybe this triangle isn't it, right? Maybe it's not it. Maybe there's more consolidation to come. We don't know, right? We can't ever see into the future, but we have broken out both to the downside and to the upside. So I will have a bullish bias on Bitcoin today, unless we close a 4-hour candle under this candle right here. All right. If we do that, then I could have a lower target of like 114.5-ish down here around that long-term trend line. That long-term trend line is coming from these swing highs over here. Boom, boom, right? And they're up swinging. So the other trend line that we had was from this swing high to this swing high. So you could, in theory, get all the way back down to 108. I don't think that's what we're going to see, but only time will tell. Right now, you're working on a bullish engulfing at support. So this is your bearish or your down day, right? Your bear trap. This is a close below support, and this support, that is a lower close, and it's a down closing day under this trend line. So that's your weekly little pattern there. This is a bullish engulfing, and it will be unless you close under the open of yesterday. If you close under the open of yesterday, then this will be a bearish engulfing candle, and I would expect downside continuation from that point forward. Not until then. right now, with the way it looks, we have to be bullish or have a more bullish bias, because you're right now in the process of making a bullish engulfing candle. So the daily open today is going to be very important for continuation trades. So if you're setting in Bitcoin and you're biting your fingernails right now because it's pulling back off these highs, I wouldn't worry about the 4-hour candle closures. Not yet. I mean, yeah, it looks nasty. It looks like you would want to be a seller at supply after this. But you know, we got to go get our VWAP. We got to give this time to play out. We've seen weekly lows and highs be set early in the week. We've also seen them set midpoint of the week. Last week we had a pullback. Though my favorite place to be a buyer on Bitcoin would be last week's low. So if we do see a pullback today, like if prices do get downside continuation, we break down. If we get below last week's low and then back into the range, I'll be a buyer here, right? Because that'll be a liquidation below last week's low. And we could see that. We could see that move. I don't know if we will, but we could. Looking at the liquidity chart, it doesn't really look as if though it needs to do that. But you can clearly see how thin the liquidity is right now. Like, there's not a lot of volume being traded on Bitcoin. This is why we're not seeing big moves. We're seeing range-bound chop scenario. This is chop fest, man. Let me pull up my epic pin. See if I can get something going here. Right. So the liquidity is super thin here and up here. So we could see Bitcoin trade in a range for a long time. For another week or two, right? So we're just going to be looking to scalp the range while it's trading in the range. It's the best trade to take. All right, so the VIX, it's still under the yearly opening range, but it is gapping up today. It's up to 1690. As long as it's under the yearly opening range, I have a bullish bias on the markets. I know everybody wants to be an uber bear right now because the markets are stretched out, right? They're significantly overstretched. Well, if you look at this chart, like on Ethereum, you're seeing more shorts posted up on Ethereum right now than, I don't know if this is ever, like, I don't know if this is a long-term forever chart, like if this is the most ever, because I got this chart from Bravos Research, Bravos Capital. This thing can keep going, right? This is retail trying to pick a top. Now, someone asked me, how do I know that it's retail? Because the buyers, the smart money are long. They're not short. They're long. You're moving up. Always, when you're wondering who's doing what, just look at the chart. The chart will show you where the money is, right? If the chart is moving to the upside, the money is obviously long. When I say the money, I mean anybody that isn't retail. Retail usually is trying to pick reversals, right? Always trying to call tops, wanting to see pullbacks. So when you think retail, think reversal. It's as simple as that. Like, retail's always trying to pick reversals. Smart money always trades with the trend. And you're seeing a massive explosion to the upside here. So, I mean, clearly, the shorts were off sides, on the wrong side. Now, because you're seeing such an influx in new short volume, it could beckon, or you could think, hey, well, then I don't want to get long up here. I don't blame you. It is extremely stretched out. It's been going up 1, 2, 3, 4. This is week number 5, right? So if you want to take profits on Ethereum, do so if you're long from down here. It's good to take profits. But people that tried to short the yearly opening range, they got ran over. And we can see that based on how this candle printed. It printed as an engulfing, but midpoint is where the resistance is. So whenever you do that, whenever a candle puts that level that you're watching to be resistance as the midpoint, that's a legitimate breakout. That means the shorts were being targeted. Prices went higher. They broke out. It smoked everybody. These are stop losses getting triggered, also forcing prices higher. We know it's not legitimate supply, because if it was legitimate supply and not selling, that's what supply is. It's sells, not shorts. It's people taking profits, closing positions, taking their money out, rotating capital from Ethereum to somewhere else. That's what causes these moves. This is an influx of capital. This shows demand. So prices are going to aggregate higher in search of what? Supply. So when you see a candle break out above a technical level and put that level pretty much on the midpoint of that candle, that's just shorts getting smoked. High levered shorts. Big money does not put on 100x shorts. They don't trade with leverage. If they do, it's very little, like 2, maybe 3x tops. They're not, smart money's not, yeah, it's retail. But this move is getting a little bit long in the tooth. I would like to see a correction before I was starting to get long on Ethereum. So we just had the bell here. Let's go look. The 2 trades that we're in, like I said, we're looking to capitalize on the momentum that we're seeing on Penguin. So I want to be a buyer. That's Pendle. I want to be a buyer as long as we're finding support. We don't really have an objective level here for support other than a 4-hour open. That's all we got for now. It is an objective price point, but it's not like a significant high time frame level. And you can see how it does look like they've lost the momentum. The bulls have lost the momentum here, but we'll see if they just want to run these lows and then go, or if it gets downside continuation from this point. If you think this is extended for pudgy penguins, if it's too expensive and you want to short it, I mean, where? I don't know. I don't know. So far, daily supply has worked. So far, you've got risk markets moving back to the upside here. So here's your 5-minute chart on your ES futures. Here's your daily chart on your ES futures. Here's your daily chart on your NQ futures. Here's your 5-minute intraday chart, or sorry, 15-minute chart, 15 minutes. So you can see you're breaking back to the upside. Down here, I have intraday charts pulled up on Tesla, Apple, Microsoft, and Nvidia, because those are the 4, or these are the 3 leaders, but everybody loves trading Tesla. We've got earnings coming up on Tesla, so I'm not interested in trading Tesla until the earnings. We'll go over that here in a little bit, but we're trying to get you guys positioned. So the reason I'm looking for a short on Doge, like I said, it's just to hedge any potential downside that we see today. Like if the markets roll over. The crypto world is extremely bullish right now, not bearish. So I don't want to short things. I want to be a buyer at support, but I do have an open short, a very small position open on Doge for now. If it gets back above the weekly open, I will close that position because obviously it's not wanting to roll over. So we'll give it a minute to see what it wants to do here. Fartcoin is my second favorite thing to trade. Well, it's my favorite thing to trade outside of Bitcoin. Right now, it's currently trying to build in support. It's up almost 7%. It's 6.3%. So it's up big on the day, but we know this thing can go up much bigger. I've seen Fartcoin trade up at 20% inside of a day. That's another 14% higher it could go in theory if it has a big range like Pudgy Penguins did. So if you want to be a buyer on this, you would be looking to buy roughly right around the 150.26 level, as that's where your intraday VWAP is. This is a green level or a green line. I understand that, but this is your weekly open. So this is going to be your weekly VWAP. Tomorrow, I will put on the white one for the intraday VWAP. So right now, your weekly VWAP is your intraday VWAP as well. And it's finding support here. Let's just check out the volume, see if it's above average or not. There it is. We're not above average on volume yet today. So you might not see a big breakout on Fart today, right? If I was looking for a big breakout on Fartcoin, I would want to see that volume, especially right now because we're at the New York Open. I would want to see that volume much higher, at least back up to average. That dotted line is average. So if you're not even there yet, then that suggests there's not a significant amount of volume in this. Here's Doge. You can see you are almost at average volumes today. Now, clearly you're going to get more volume, so you could see an increase in volume in Fartcoin, but we're not seeing that yet. Whereas if we go look at something like Pudgy Penguins on the daily range, pull up the volume, I assume we would be at or even higher than normal volume. I don't know why it's struggling to pull that up. I might have to close out something here. Okay, so we're almost there, right? We have significantly more volume than the last 3 days, at least. The last 2 days. Friday, we're right at the same amount of volume. So clearly this is going to close up much higher on the day. And since it's ripping right now, since it's got the shorts currently with their backs against the wall. So think about anybody that's short that hasn't closed out yet. I couldn't imagine they haven't been liquidated. But they're probably waiting to see what kind of reaction they get here at the open. Because if the New York session opens and then they see a strong sell side show up in the market, then they won't close those positions necessarily, because they'll just assume it's coming back. But if it takes off to the upside, then that will bring in forced liquidations and could presumably throw this thing much higher. So I do have a current long position open. I don't really see anything else on the ticker. Jasmy's up 15% according to weeks, but on TradingView it's up 4.7%. So everything that I have on the watch list, the biggest mover is Pudgy Penguins. I'm not really seeing anything else that's flying today or right now. But it doesn't really look like it's breaking out as well. But nothing major happening here on as far as like craziness. Fartcoin is up pretty good, so this is a very fun asset to trade. It's kind of in no man's land right now. This chopping sideways here is giving me a little bit of a pause. But like I said, I mean, it would be easy to mitigate our risk right here. The Doge short is not working. You're seeing that it's ripping right back up again. So we have to be very careful with that. Generally, like I said yesterday, when the shorts are running things, when the sellers are in control, you generally see big red candles. with big volume. You're not seeing that here. These are small relative to the candlesticks that you've been trading all morning. So you're not seeing extraordinarily selling happening, extraordinary selling, right? Generally, that's what you want to see if you want to short something. You want to see the sellers clearly running things. Now, this could just be a stop run for now. But if you start closing 5-minute candles above the weekly open, your short will be threatened. See if it runs higher. Skip wanted Doge. That's why we're talking about Doge. Also, it's at the week open. It's at a technical level for us to potentially short if we are expecting a pullback. That is all. That is all we're doing here. Because if it stays bullish with the rest of crypto, here's the watch list. So it's hard to short crypto when this is what the watch list looks like, right? This is your Bitcoin dominance chart. So we want it to be down for alts to rip. Everything else is up. So I don't like shorting assets when you have that kind of market. We want to be short assets when everything is red. All right, let's go look at Tesla real quick. As Tesla did break down, but then it got right back up into the range. And we have earnings coming up. So I'm not looking to trade it before earnings, but coming up like maybe Tuesday, tomorrow evening, I might throw on a FOMO trade, not a short, a long. Because we have the yearly opening up here at 390, we could put on a YOLO trade where we could go way out of the money and buy like a 380 call or something like that. Obviously, if it gaps down on earnings, that's going to expire worthless. So we want to make sure that we pick one, either side. If you want to do the bull or the bear side, be my guest. Just if you could actually, depending on how cheap the options are on Tesla, you could potentially buy a put and a call, but if it does nothing, then you're going to lose both of those. But the last time we did a YOLO trade on Tesla earnings, we made money, and we bought a call for $55 and I ended up selling it for $5. So it was a great trade, but there are many times those trades do not work out. Right now, a 390 call on Tesla costs, well, it's $73. So if we wait until tomorrow evening, that cost will, that's coffee burps. The cost of that premium will be much cheaper. So here you go right here. 390 is $73. If you wait till tomorrow, you'll probably be able to buy that at $50. And then you're putting that entire $50 at risk. But that's the point. It's a YOLO trade. If we buy it, we can risk $50 on the trade. That's essentially what we're doing. And then on the put side, we would have to get a measured move from this, roughly. That would give us about 230. So we would want to go up a little bit. Maybe like the 240s. Oh, there are only 16 cents. That's too much though. I would say 280 would be more achievable on a big gap down. Right here is 280. That's May's open. I don't know. Let me see. And that's also May's low. You got a double bottom here. So, I mean, maybe that would be a good target, 280. Because if you do gap down, and if you could take a call and a put, and you get a big blowout on earnings, a big gigantic move, then you could, in theory, make a little bit of money. Because let's be honest, if you spend $50 on a call and $50 on a put, you're looking to risk $100. You just need Tesla to move big one way. Because if it does, you're going to be close to in the money. Your premium will explode in value. And in theory, it should cover the $100 fee. But if it does nothing, like I said, if it's a nothing burger on earnings, then you're going to lose the entire $100. So yeah, I would leave it alone today. I wouldn't try to pick it today, the direction. I would let it basically trade back down to in the middle of this range, which it's likely to do. And then look for one of those out of the money options to get the price down. Just make sure you're willing to lose the money that you're risking. All right. As that's typically what we do. So Farcoin is moving up away from the support, and Penguins is also moving up. That's not Penguins. I need to just delete Pendle. So we're seeing it start to move up a little bit here. So that's what we want to see, as we do have another long position on that. And then the Doge trade is still kind of doing its own thing here. So you did liquidate that high. So you shouldn't need to go up any higher. Right? That's your short position right there. So you would be essentially taking a short right now and throwing your risk up here somewhere. If you think it's going to roll over. It may not. I don't know, right? We never know what price will do. We just try to position ourselves to catch the move that we assume is going to happen. And we expect to lose a specific amount of money to do that. But it's literally testing the area that I would want to see it roll over at if it's going to be a down day. You're also at the high edge of the value area, so that's going to be your value area high. Sometimes they act as resistance, sometimes they don't, right? Everything works in trading, just not all the time. Hence, you need to add your risk somewhere. If you can get your 1% trade off with throwing your risk above the high of day, that's what I would do, right? The wider your stop is, the better success you give yourself, or the better or the more, yeah, it's just better. I can't get my freaking mouth to work with my brain today. The wider the stop, the more room you give the trade to work out. It doesn't mean it's more likely to win or anything like that. It's just more room is better, especially when things are flying around. Doge is neutral on the day. This week open is also your daily open. But wherever it trades to today, this will always be the week open moving forward in time. So it is a pretty decent spot to mitigate risk. The problem is everything is bullish, and taking a short is not advised. I don't think any financial manager worth his salt would tell you to short a crypto asset when you're clearly in a crypto bull market, right? Here is your total 2 chart to show you that you're in a crypto bull market. This is the total crypto market cap excluding Bitcoin. Now, these are your alts, including Ethereum. Boom. Like, what? Yeah, it's bullish. A very bullish market. You've already liquidated the previous day's high. You're currently trading above it. So if it was going to be a liquidation break, you would want to see that start to fall soon. That's not happening yet. Here's your total 3. This is excluding Bitcoin and Ethereum, so this is mostly alts. Doing the same thing. It's currently liquidating. So if crypto is going to pull back today, we would want to see it pull back from here, right? We want to see that white line get under the other white line and start to slowly trend away from it to the downside. That's if the crypto market's going to pull back today. And I've seen total 3 with Bitcoin or divided by Bitcoin. I don't see what the difference is looking at this chart or just looking at total 2 or total 3. It's the same thing. It's the same thing. It's just showing you that you're breaking out of a year-long or almost, a year-long downtrend. But you can see that breakout move would have been better to take part in Monday. Last Monday, not this Monday. Can this go up still? Of course it can. We've seen cryptos fly for many days in a row. How many days in a row did you go up here? 1, 2, 3, 4, 5, 6 days in a row. I think we're better than that now, aren't we? Yeah. 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row. You've been exploding to the upside. So trying to short these it's going to be difficult. You're likely going to eat stops. Many of them. So this is why I want you guys to start to be a buyer at support. Be a trend follower. Stop being a contrarian, right? There's too many contrarians out there. I mean, I've already proved it to you. You've got this chart right here. This is a contrarian view to look to short Ethereum. Even if you're only looking for a pullback, that is a very contrarian view right now. You're a pessimist on the market, right? We're expecting Bitcoin to break out to the upside here, not break down. We liquidated who we needed to liquidate yesterday, in my opinion. In my opinion, the liquidation has already taken place. So now I would assume prices to just melt up, which is typically what we see in a bull market. Gold is also breaking out today. I think gold is breaking out because the dollar is weak. I think that's why we're not seeing capital rotate from gold into Bitcoin, because the dollar is weak. So since you have a weak dollar, people are still invested in holding gold. They're not looking to get out of gold until the dollar starts to move higher. And since the Federal Reserve is in a rate cutting cycle, not a rate rising cycle, hiking rates, we're not doing that. So we look for the dollar to be weak. Rate cuts usually equal weak dollar. Rate hikes usually equal strong dollar. So gold is still maintaining that strength due to the weak dollar. So I'm not looking for shorts on gold any longer. If I was going to expect that capital rotation to happen, because there at the beginning when we hit 3,500 or 3,000 first, I was expecting a pullback in gold for people to rotate out of gold into riskier assets. We didn't really see that. It didn't take place. So I was definitely wrong on that. S&P 500 is breaking out to the upside. Fresh all-time highs on your cash market. Fresh all-time highs. This is what I'm expecting to continue, right? Weak dollar, strong stocks, strong Bitcoin. Like, we're in a bullish market phase, guys. I can't say that enough. Even oil is going down. Like, It's still very sideways, but today it's going lower. Lowering oil prices does help weak dollar. What does it look like if I'm on the internet browser? Let me see here. It looks okay. Let me just do the, well, that's fine. I guess it's fine. The only reason I'm saying that is because the platform is lagging up a little bit. And on the browser, I can just refresh when it starts doing that. When the platform starts doing it, it's a little wonky. So yeah. We're expecting cryptos to continue higher. Fartcoin is up 8% now, so it's getting a run higher. We're not dropping any frames, so the internet speeds are still good. It's just the platform. A nice slow migration higher. We're seeing Penguin slowly migrate higher. Now, Penguin might not do anything today because it's already moved and you're going to have so much more volume flocking to the asset. And if we pull up our session volume profile, you're going to see that the point of control is up here. When we see this signature, we oftentimes do see price roll over, but we also sometimes see price break out and make fresh highs to liquidate all the shorts that are piling in this. So in a lot of times when you see a heavy buying like this, it's going to be short stops more than it is high buyers, right? Because as price pushes up, you're stopping out shorts. Stopping out shorts creates new buy orders, new buy liquidity. So that gets counted as a buy. So it does look like the buyers are stronger than the sellers up here, but that could just be from forced liquidations. So we really don't know who's in control of the market right now. But this is a very extended range. So I can imagine shorts are shorting it, looking for a return to the mean. I mean, it is a legitimate strategy. It's just sometimes when things get hot like this, they can stay hot like this for multiple days. And this is on a fresh breakout. So I think it's a little bit early to look for that return to the mean trade. So if you are a mean reversion trader, I think you would be better suited shorting something like Doge. Even though it's not working right now, you're up on the day, you're up on the week now. But it's barely up. It's barely up because it closed up here yesterday. So this is not looking like a short formation. This looks like a long formation. It looks like you should be buying the lows, not selling the highs. And then Pendle, I'm going to delete you. Market's just getting started too. Risk markets are ripping higher. Apple is ripping higher. Microsoft is ripping up. Nvidia did put in a low a day, but is now ripping up. And your advanced decline lines, you're positive 937. But you did open up at around the 1400 area. So you've seen a pullback at the beginning of the market. And now things are moving up. So maybe around 1030, if the shorts are going to win today, they'll start showing up after then. Give the markets time to move up. But it's moving up with strength, guys. It's not like slowly moving up. It's moving up with strength. When it moves up slow, it's also a terrible short because generally it just keeps melting higher. It isn't until like at the end of the session do you get a couple big sell-off candles. Pendle making fresh daily highs. Penguin finding a bit of resistance here at the point of control. I'm just looking for an old objective level. Don't have anything. Nothing. You have an old weekly high there that is higher than this week's high. That's probably, if I had to guess, the yearly opening range would have been the first place for the shorts to stack up. Clearly they got ran over strongly. The second area was here, and they got ran over strongly. What is Bonk doing? Ooh, Bonk is up here right back at the level that I was looking to add to my short for Bonk to potentially roll over, but it was doing the same thing. So as long as we're trading under this purple level, I might look to short Bonk. Let me get Bonk pulled up. It's up 10% though. I'm gonna have to wait. I can't take it right now. I'd be chasing price. So we'll wait to see if it can retest it again or make a lower high. And we'll throw on a short on Bonk. Above the level, I don't like the short. Just right here and under, I like it. We're above the value area high too, and we're not seeing a whole lot of volume creep up here. So nobody's paying attention to that level, not really, except me. It's this candle's close right here. December. So that's the highest closing price on a weekly basis for Bonk. That's why I'm watching it. We traded well up above it last week, but was unable to close above it. That's why I'm watching it. As long as we're not trading above the level, then we're not threatening to close above it, right? As long as we are above it, then it's threatening a higher close. And we typically don't want to short things that are threatening higher closes. we don't want to short those. But we will today because we are good. This week is already pretty much done for me. This weekend was great. Last night was great. Let me see. I just want to see if it'll give us a higher high. I mean, a lower high. That might have been it. I still don't want to chase it here. But damn it, man. There is an old 4-hour support level there. We don't need that anymore. We know where the point of control is. It's under us. This is working as a fresh breakout right now. Volume is bullish. That would have been the best spot, but we'll see if we get back up there. So Penguin is rolling over. Come on, Bonk. Give us a little bit higher, man. Come on, you can do it. We got faith in you. Maybe not. We can potentially wait for the bounce. You're going to get a bounce. And then look for the short later on, I guess. But I don't really want to miss it, because if it does end up being a short, then you'll probably see big down candles. And then that lower high bounce would be too low to look for the short. Penguin's rolling over bigly. Okay, so it's losing bullish momentum here. Man, this thing would have to drop much harder to get oversold on the 5 minute. So just check the oversold levels on the 1 minute. So when the bulls had the momentum, every oversold reading on the 1 minute was a decent buying zone, as long as your risk was mitigated, because you still put in a lower low here. But basically every 1 minute oversold reading, here was another oversold reading that came in that they bought up. So here's an oversold reading that came in that they tried to buy up, but then it did not make fresh highs. You see what I'm saying? So you're losing bullish momentum, because then came in another oversold reading and it did not get a bounce, and then a deep oversold reading. So those FOMO buyers should have came in there. And it does look like they did. So the bulls might be flipping momentum here back to bullish. So if you're trying to short it, you need to short the overbought signals, not the oversold signals. Because if the sellers are, like I said, if the sellers get control of this, you will get big down candles, big ones. These are not big yet. It will feel big though, because this thing is moving so much, right? You're up 21%. So just from this swing high to here is a 3% move. So if you are short here and go in with anything more than 20x leverage, that's going to be a significant loss. When you're flying around like this, sometimes it's better to lower that leverage slider and take smaller position sizes. Definitely skewed to the upside on volume on probably every time frame. Every time frame. Risk markets, NASDAQ just made fresh all-time highs. Yeah. And it's pushing higher. It's not like rejecting. Gold's still hitting all-time, or not all-time highs, but it's still hitting fresh daily highs. And the VIX is back down on daily lows, 1672. Bonk. Give us a bounce, bro. We might have missed the entry. I do like that reaction at that level for a short. I do like, because we discussed this last week when I was holding this thing short. But like I said, the shorts could not get downside continuation, so that makes me flip my bias to bullish. If you remember last week when we were doing the live streams, we were short. I was short from up here. I didn't want to lower my cost basis by shorting it here. So when it rolled over, I basically told everybody then that if we got a retest of this level, this purple line, that's where I would want to add to my short position. Well, I ended up just closing the trade out because we didn't get downside continuation. I had a downside target of the yearly opening range. We failed to make lower closes after this candle. And these are 2-hour candles. So there's not many of these in a day. 12 of them, and that's it. You're done. Your day's over. So you've got many days here of trading sideways and failing to go lower. That's not bearish signal. That's the opposite. So price exhausted, the supply was, the supply was exhausted down here. So price aggregated higher in search of supply. There was enough demand down here. There's just not enough supply down here. So price aggregates higher in search of that demand, or that supply. Sorry, I get my words confused, but supply is higher, demand is lower. So that's what's causing the markets to reprice. You exhaust supply, it reprices up looking for supply. When you exhaust demand, it'll reprice lower in search of demand. So we want to see if the demand is exhausted up here. Because it did once before, that's all. It doesn't mean it will now, but it did once before. Since there's plenty of demand down here, it might be creeping up. If demand is creeping up, then literally prices will just continue to go higher in search of enough supply to get trading back in equilibrium. And those repricing moves is what we want to catch. We want to catch those. That's what causes the trend, right? And this market is not a market that I would be wanting to short usually. But things are getting a bit overcooked here. Doge is back under the weekly open. Not really seeing an expansion lower though. It's just barely getting under it. It's not expanding lower. It's not repricing. There's probably plenty of demand and supply right here on Doge, because you're literally finding that those swing lows moving up a little bit early on Doge, whereas Bonk has had a little bit more time to suss those buyers and sellers out, right? Bastard. Probably gonna see a bounce soon. Or a big drop. Yeah. Loving it. Good morning, says Bravo. What's happening? Anime is flying. Anime, is that a crypto? I don't know. I've never traded anime. We'll go look at it. Anime coin on OKX. Let's put a T on the end of that bad boy and get it on Binance. Not flying anymore. It has been though. Yep. Looks okay. It's still trading inside of June's range, but you liquidated June's low and then the buyers showed up. Oh, did we talk about Compound yet? We'll talk about Compound after this. Compound might be getting ready to fly or roll over hard because there's a lot of volume coming into it. Son of a biscuit. Let me do this. Where is it? I must have not saved it. Oh, it's right there. Let me go back over there. Sorry. Big volumes on it. So what we're seeing right now is a near-term correction. This is about where I'd want to see support hold on this. If you are long anime and you're holding it, if you're long lower than the open of today, good job. Like, that's a fantastic trade, right? So I would definitely want to see this area hold as support. If this bullish breakout's going to continue. I like that you're getting the pullback on a decrease of volume here. Now what you want to see pretty close to this close, or at least these prices, is you want to see volume start to pick back up, and it is starting to pick back up, right? This is the first time you tagged the daily midpoint, this candle, since you traded away from it here. Okay, this was the first time you tested it again since that time, and look at the increase in volume that took place there. Okay, so that's a good sign. But now what you need to see is you need to see more demand start to show up. More demand than supply at this price, which is the midpoint of the daily range. If you get that, then you should see a pricing higher. If the demand shows up, it does look like it is showing up. But the problem is we don't know if it's supply or demand when we're looking at volume candles. Even if you put the color on it, it doesn't matter, because the volume candle is always going to close as the same color as the candle. And just because that candle's red, that does not mean there was not more buying in that candle. There could be a massive bid delta in this candle, which would create a support. See this? That's your delta. Your delta was skewed to the buy side here. So now what you need to see is this price needs to hold as support moving forward. So if you want to be a buyer on anime, this is a level that you could be a buyer at. It doesn't mean you'll make a penny on the trade though. I'm just saying this is an objective price point where buyers would step up. That doesn't mean they will win, but it is a good level to put on risk. You could wait for a potential liquidation, but you might not get it, right? If it starts to reprice out of here hard, you might not get a retest. You might not get a liquidation under this low. So if you see something like this, then you don't want to buy in front of that, right? Because something else is taking place. But as long as this level holds, oh, you're not closing under it. As long as it holds, then you could see it repricing higher. What is dominance doing? Dominance is moving lower, so if it is going to go up, we would want to see it start to go up soon, right? I don't know if this is a fast mover or not. I'm assuming it is because of its price. It's only 2 cents. Generally, when things are super cheap like that, they do move pretty quick. I guess we could check it. Oh yeah, this is a fast mover, bro. From just here to this swing high is a 2% move. That's a fast mover. Very fast mover. So can I even trade this? Thank you for telling me about it. It doesn't have very much volume though. 243,000 is all that's traded on weeks on the perp swaps, right? On the perp swaps, there's probably millions of these things being traded on a daily basis in your spot market, but on weeks perpetual swap, there's only been 243,000 of these coins traded, or those contracts traded. So it's kind of thin in terms of liquidity, and I don't like trading things like that because you'll get bad fills occasionally. Like if you use market orders, which you would have to, getting filled on limit on something like this would be difficult. So when you put in a market order, you can get filled much lower. It's going to fill you on the nearest bid or ask. And that ask could come in real bad and fill you really bad. It's better to trade, and you won't even know that you were filled at that price until you look at your order to see what price you were filled at. So be careful trading it. It's a very fast mover and thinly traded on my exchange. Your exchange might be better. But yeah, this is the level that I would be looking to be a buyer if I was expecting dominance to continue to roll over today. And it can, but I mean, it has been going straight in one direction for a very long time. Very long time. So it can keep going for a longer time. I'm not saying that it's going to stop. I'm just saying it starts to get a little bit iffy. Like, I want to try to position myself when we get chop, so that way I can potentially catch a continuation run. And that's generally what we want to catch. But yeah, this is going lower, so shorting cryptos ain't going to work as good today. Bonk is bouncing. Ugh. Let's see what it does. This is where it's going to get sticky. The bonk has traded 74 million or 70 million with 24-hour volume, so it's trading a lot thicker. That's just a slow, methodical move lower. I'd want to see it roll over pretty soon. If it's going to. You just made fresh all-time highs again on NASDAQ, and you're currently making a fresh all-time high on ES. 992 on advanced decline. So really the only one that is still down is Nvidia, and it's not even down, it's up. It's just down on the day, but it's up from Friday's close. So we want to see bonk roll over here, or a little bit higher than here. Not much if it's going to roll over. See how Penguin is not really able to get anything going to the upside here? Don't really love that. Let's see what we do here. I want to see Penguin put in a trap here and then reverse back to the upside. As bonk is moving up, Penguin is rolling over. They don't trade the same. I'm just letting you guys know because these are the two that we're really focused on right now. Doge is up 2% on the day, so Doge ripped. Boom. So yeah, that's what I'm talking about. This is what happens in a bullish market. This is why shorting anything is just, it's a waste of time. It's almost better to just look to be a buyer. But it's hard to be a buyer on things that have moved so much. I get it. But the momentum is pretty much still to the upside. It wouldn't take a whole lot, right, for it to just, boom, go up. You're seeing some aggressive sell-side repricings on Penguin, but they're not getting continuation. You almost need to kind of wait for a blow off top to start shorting these things. It's not as sexy to wait for that. Obviously, it's much sexier to top tick a trade and then you get a blow off. But that's just like almost impossible to do. You can do it, but you're going to eat many stops before you nail it. ETH is at a very critical point. If it rejects where it is right now, you think alt season is canceled. No, I don't think alt season is done because I don't think you got retail mania yet. Like on some of these things, we've seen that Penguins, for instance, has already had a 2-leg price run up where you ran up strong, consolidated, and ran up strong again. So like that one could be done. Like this one could be done. Here's your first explosion, and this is all consolidation. Then here's your second leg higher. But today's price action doesn't look like it's done. Today's price action looks like it's just getting started. Unfortunately, it's like huge. This is a big move today. And Ethereum has run multiple days higher. I know it makes sense to just think, well, it's got to pull back, but then what? Right? Then what? We know that Bitcoin is not overpriced right now. It's still well within reason of where it is. If you just look at where it is in reference to the 200-week exponential, it's getting expensive, but it's not like super expensive. If that makes any sense. Where's the 200 week? So, you know, once it gets like massively extended, then it's usually when you see tops. I wouldn't go by that 462% clearly, because that's going to stop as prices go higher. If it's 100% above, I mean, it's you're not seeing that like parabolic move yet. It's just slowly moving higher, which is normal, regular bullish volatility. I wouldn't expect it to be over until you start seeing that mania, that craziness kick in, where it's just like, oh my God, it can't go higher, right? When you start hearing all of everybody say that, then I would expect a little bit more upside, but then start to be positioning myself for that pullback. Ethereum is still, I mean, it's just kind of, it's been moving up for several weeks in a row. But that's an aggressive move. This isn't a longer term pattern formation. Long, like on log. This is why people are looking for a massive move on it, because you have this. I mean, this is a clear failure above and a clear failure below. But then it went straight back up there with the quickness. If you break out above the high of 2024, it's not impossible to see Ethereum hitting $5,000. Seriously. Not impossible. But at the same time, that's a crazy, insane price target when you're talking about a $3,800 ETH, when just a few short weeks ago, it was trading for $2,200. So you've almost doubled in value from down here. If you get above that 2024 yearly opening range, you will have doubled in value. But generally, when you have this kind of momentum, you don't want to fight that. That's what you don't want to fight. That's what retail is right now trying to fight. They're trying to fight that momentum. They're just getting chewed up because they can't imagine buying it at these prices. But then 6 months later, when you're talking about a $5,000 Ethereum, $3,800 Ethereum look good, right? I'm not seeing, like, there's no, you tell me a macro reason why the markets cannot go up right now. Give me one macro fundamental reason that prices cannot continue higher. Other than the debt, right? Clearly, the government's been in debt since Ronald Reagan. And then after Bush Jr., it really went into debt. Bush Jr. is like the first president to put us multi-trillions in debt because of the war. Both of them. $10 trillion in debt. Then Obama came into office and he added on another 10 trillion. Then Trump added 4 or 5, and then Biden added another 6 or whatever, and then now Trump's going to add another 4. The debt's been here for 20 years, 25 years. That's not caused the markets to sell off. It's doing the opposite. It's causing markets to go up. Because debt creation is liquidity. There's not really a macro reason to short right now. The government's not, we're not looking for a recession. The GDP is expected to be back in the positive this time. I mean, if it is in the negative, you need 4 or 5 other technical indicators to tell you whether or not a recession is coming. And right now, the indicators are not saying that. Your job's not saying a recession is coming. Nothing is saying a recession is coming yet. People are not positioning for a recession. They are not positioning for higher inflation. And also the Fed is cutting interest rates. Give me a reason, a macro fundamental reason why these things are going to be bearish. You're making fresh daily highs right now on Ethereum as we're talking. Tell me why it can't go up. A macro reason. There's not one. So until we have something, a macro something, then this can go on for the rest of the year. Usually people love it when this is happening. I've never seen a time where retail was slightly more bearish when the markets were bullish. I can't think of a time. I know people want to buy them, but they're afraid because they've been ruined so many times. Every single cycle we've had since until now, people have historically bought the highs. I'm not telling you to buy these things at these highs. I'm telling you to wait to buy when you form support. And have clear take profit levels and clear stop loss levels. I'm trying to teach you how to trade. I'm not teaching you to buy. I don't want you to go buy pudgy penguins and expect this thing to go to $100. That's not what I'm doing. I'm trading the volatility. I'm looking for intraday opportunities and longer term opportunities when it fits. Pudgy penguins might not be along today. Maybe it's tomorrow or the next day, right? That's what I want to try to get you guys to do, because you can make money doing it. You just got to have a clear set of rules and abide by them. As long as you abide by the rules, you will be fine. It's when you stop doing the rules. Damn it. Yeah, this was probably a hit. This was probably it. If it's going to roll over. If it's going to. I don't know that it is. It's a bullish candle on the 4-hour. This is not a short. You're expanding higher after failing to run lower. That typically isn't the short. But as long as we're under that level, then I can put on a little bit of risk to see if it is. Right? Just to see. I can put out a little filler here. A little bit of a feeler. Just to see. So I'm going to put on a short here with a very small position size just to see. And I'm quick to get out. Quick to get out. The long on Penguin isn't working, right? So, yeah, not all of them are going to work. Doge is rolling over now. Or not rolling over, but it's off the highs now. But if the buyers keep stepping up higher, then it's going to continue to go up. And right now, the markets are super bullish. Your VIX is on daily lows. Here's the cash market ES. This SPX. It's yeah, I mean it's barely pulling back, if anything. It's not bearish. But maybe Pudgy Penguins is run too far too fast. So it's not going up. But that doesn't mean that bonk will go down. Does that make sense? That doesn't mean that bonk will reverse. Because the watch list is green. Really green. I'm not seeing any red. Except for in this. And this should support cryptos. Look at Fartcoin. So did you get long when it was down there? You should have. I didn't. But you should have. Was we were bullish on this. Pudgy Penguins might just have too much volume in it right now, so it can't really get anything going. This right here can go up another 10% today. This is a breaking out here. We have an upside target on Fartcoin. Well, we had an upside target today up to there. It's looking good. We just need penguins to do the same thing. And then we can forget about bonk. Which might want to do anyway, because it's not looking like a short, right? It's not rolling over. It's doing the opposite. Starting to see a little bit of a pop here on penguins. Let's see if this was the trap. Let's see if this was the trap. Yeah, baby, go. Go, baby, go, go, go. Let's go up. I want to see you close up on the day 50%. Go ahead, make my week. Good morning, all, says Roger. Good morning, Roger. The weekly on Doge looks good to me. Double bottom off the 200, double bottom. Yeah, it does. I mean, all of them look good. They all look great. As long as dominant stays weak, it's just basically just pick one. Or pick a handful. Like if you're just buying spot on pullbacks, that's okay too. Nothing wrong with that. Buying spot on pullbacks, I don't see a reason. I don't see nothing wrong with that. It's going to be much easier to handle if you don't use a lot of leverage. You're not going to get liquidated as often. Beautiful. That's what we wanted to see right there. Hold that penguin long. Penguin got added to an ETF basket of cryptos. If it gets approved, it's going to print. Well, that's why, I mean, I didn't see that. I thought Bonk was getting an ETF. So Penguin's also getting an ETF? Or it's just a basket of, yeah. I can't imagine the SEC would approve a Pudgy Penguins NFT ETF, but whatever. I mean, if they do, it'll fly. I agree. Or it could. I knew Bonk was being, right now, Bonk is also in that same atmosphere. They also have an ETF waiting approval right now. See, that's the reason why I like Bonk lower, kind of. If the ETF fails, it'll give back a lot of that move. Not all of it, but because you're also seeing a move up on it just based solely on crypto is on fire right now. So naturally, all of these are going to get a sympathy bid. So Compound, let's talk about that real quick while we're waiting for penguins to freaking skyrocket. Compound is on my watch list because it's seeing a significant increase in volume lately. The last 3 weeks. If you look at it on a monthly, you can really see it. So we have more volume this month, and we're an inside monthly candle. So breaking out above June's high on Compound, you could see an expansion higher. So let's get rid of the trend lines. But basically what I'm saying is, based on this volume, if it doesn't roll over, because it could roll over too, we don't know what's going to happen, but we do know that for this month, there is a significant amount of volume in Compound right now coming into it. And the move is not big. It's very muted. The size of the range is very tiny. Like, look at this volume bar over here. Look at the size of that range. Boom. Like, huge. So just look at half this volume as the up move and then the other half of the volume as the down move. So that's what you're seeing here. A push and pull. You're seeing tons of volume come into this based on buyers and sellers. So if the buyers win, you could see a larger scale breakout. Like, we could retest 73.19 if it gets the breakout. Maybe it isn't this month, maybe next month, because we've got 10 days left on this monthly candle. So it might not be this month, it might be next month. If it takes off though, this one will be one where we could scalp volatility to the upside. And it has broken out basically of like a trend line. If you put on a trend line from there to there, you basically have broken it last week. So this week just opened and you're already testing last week's high. So this is where sellers are selling. What is going on? This is only up 2% on the day too. Now this isn't a very fast mover, clearly. It's not, because it's expensive. Up to June's high is another 13% though. And in my like, this is a high that it's going to need to break, and so is this. So I can be a buyer of support on this once it starts to break out. Look at the volume coming in here now. This could literally be a buy right now. Or a sell. I mean, it could go either direction. That's the bad part. But if it starts to get momentum above this level, this is last week's high, I'm going to be a buyer on supports. So you don't have to buy it right now. You could literally wait until you get the move up. Then you want to be a buyer on pullbacks, intraday pullbacks. You want to buy support. That's why this is on watch. So we can make a few bucks off of it whenever it decides to go. Because when it goes up or down, it could go. right? It could really get going because of how much compression is already built into it. It doesn't look like compression. I get it. It's in expansion right now. But it looks really good for the breakout to me. Penguins looked really good for the breakout to me also. And it did break out. It did really good. Bonk is retesting that level right now. So I don't love the short anymore. But we'll take it because we're there. So I'm going to short it right now. Very small position. That's actually too big of a position. Oops. I didn't mean to take it with that much money. So I'll probably have to exit this much quicker than I wanted to if it goes up. Which it looks like it's going to. Look at this. Let's see. We do have Apple pulling back off the highs, Microsoft pulling back off the highs, Nvidia pulling back off the highs. So we do see NASDAQ and ES pulling back slightly here. I don't know if that's going to help Bonk. Clearly, the ES and Bonk are not correlated. Maybe if you get that ETF later on down the road, it'll become more correlated, but right now it's not. But we'll see if we get it here. The only reason is because my short or my long on Penguins is not producing. So we did get a move here and it did look good, but then it right back down. So I don't like that. So this just might not be a trade today. Might be tomorrow. So let's go ahead and get our midpoint. What is that? Who's putting lines on my chart? That's that 4 hour. I don't care about that. I want the daily open. I want the daily low and high. So we could pull back all the way to that. 35.5. What is your anime doing now? Did it pull back and go? No, it's losing it. Yeah, you don't want to see that. This could be just another trap. I hate to say that so many freaking times because usually you just get about one of those a day. You know what I mean? Not really looking for that to be the case. It's still kind of holding support. That low is going to be support till it's not. Unfortunately, that's all we got, right? We can't see into the future. I wish we could. I mean, I get questions all the time. People assume I can see into the future, but I can't. No more than the next man. Technical analysis doesn't tell you where price is going. It tells you where it's been and where you could potentially look to get involved, where it might go, right? But it's not predicting that to happen. But maybe you get a bounce here. This is where I'd want to see it bounce if you're going to see continuation up. It's negative on the year, very badly negative on the year. Like, to be honest with you, this would be one that I would be more inclined to short as long as it's under that, right? Because that's resistance. You're trading inside of May's range. June, you were trading above May's range, but you gave it all back and more because there's the open. So June, you literally opened here, took out May's high. So that's when you really should have saw upside continuation. And you did get it. You did get it. So here's June's open. So you opened right there and boom. This would have been May's high, right? Yes. Yes, that's May's high right there. So once you got above it, you did get a big psych out move and then another couple days higher, but then gave it all back. So I don't love that. So for this to break out, guess where you got to go now? All the way up here. So as long as you're under May's low, as long as you're under this, the threat is to the downside. You're seeing seller exhaustion at these prices, but where is that seller going? Where's the seller going to pick back up? You got a daily res right here also. So sellers are going to pick up here and here for sure. We don't know if they'll win if price gets there, but we know they will be there because they showed up here. They showed up on this day. So it's still, I mean, it looks good today and it's getting a short squeeze today. Retail shorting it down here at these low levels. And let's be honest, when these things rip, it's nothing for a crypto to go up 20, 30, 50, 60%. That hyper token, not hyper liquid, but the hyper token. Hype is hyper liquid. We are expecting this to go higher as well. And it is going higher. Slowly, but it is going back up. So this is the hyper liquid exchange, but the hyper token, it went up like 300% in one day. Hyper. Like it was crazy. A 475% move. So, I mean, yeah, your anime could do the same thing. Once these things start squeezing, it's on. It's on like Donkey Kong. That's another reason why I don't like shorting alts, because of this right here. So you'll probably see another squeeze soon. Notice how these daily ranges getting really, really small. Not really seeing volume pick up here. That bar is just too big. Let's put this on. That is on auto. So that one gigantic volume bar is going to really hurt the average. But if you start to see an incline in volume on this, be careful shorting it. If it's going up and you're seeing an increase in volume going to the upside, stay out of the way on that. Wait until you get a couple days of a pullback before you look to short it. Always don't try to short it on the day that it is popping, because you would have started shorting it down here, right? This is where people started shorting this thing. Daily res there, so they started shorting it there. They got stopped out. So then the new sellers started selling there. Boom. Yeah, wrecked city. But be careful trying to short cryptos. Make sure you're doing it the right way. Because once these things get going, we know they can go, baby. See, this isn't significant selling activity here. At best, this thing's going to chop around from here to here to here to here to here until it breaks out. Doing exactly what Penguin's doing now. It's moving back and forth, chopping, until it extinguishes the volume. It's going to either extinguish the demand or the supply, and once that happens, it's going to reprice. And that repricing could be swift, very swift. That's what we're trying to catch, a swift repricing back to the upside. Because if we could get above that daily supply level and show demand above those prices, like show me that momentum scalpers are hammering it up there to the upside, we could see another significant move out of this today. We are seeing some things move, and like Fartcoin, it did get a nice move. It doubled. Down here, you were up 6%. Up here, you're up 12%. Is it done? I doubt it. You know what I mean? Like, I doubt it. It's stretching up there. It really wants to get out of May's range. And it's trying its best to do that. You're trading above last month's high, so that means this high is being threatened. Those short sellers that shorted in May up there at the highs, their positions are being threatened today. So these people, they have some decisions to make. They really want to see this thing fail here and roll over. They really want to see that bad. But at this point, I have to assume the pros are done. They got out of it already. I wouldn't still be holding this short if I shorted it in May at the highs. I would no longer be holding that. To be honest with you, I would have been out of it here. Once you took out May's open, it's done. Like, forget it. I'm out. Not getting downside continuation, and that's what you want to see when you're holding the short. You got down here below the yearly opening range and failed. That's an inverse head and shoulders. Boom, retest of the neckline, up she goes. And then the buyers just kept coming in. Those May shorts are likely going to get squeezed. Penguin's starting to move back up. Good. I want to see it. I'm getting ready to pendle, so I don't click that no more today. I can't remember if it was pendle or if it was penguin that we did down here. But we analyzed this down here, or pendle, either penguin or pendle. I want to say it was penguin because we got that bear trap there. We were watching the liquidation below this candle's low to get long. I didn't, because I never heard of it up to that point, so I didn't even bother with it. And one of the live stream members said, do you think it could sit 23? And I was like, no way, dude. It's at 38. 23 is a dream. I even told him, make sure you take profits. But from here to there, that would be a good profit taking zone. Absolutely. Like, that's a 50% return on your money. Yeah, take profits. See, the sellers, they want to see it go, but it just can't. It just can't, because the buyers, this is being bought up. It's so heartbreaking, or it used to be. I don't do it anymore, but it used to be so heartbreaking to short these things and then just watch them freaking slowly come back. So disheartening. It wasn't until I decided to get on the opposite side of that I started doing better. Stop trying to call reversals. Look for continuation. Be a trend follower. And you'll do better. Algo. Yeah, let's look at algo. I haven't looked at it for a few days. It's looking good today. You've smoked the weekend's highs. That's always a good sign. It's trading into resistance here, but I mean, I don't know if it'll hold or not. That's why right there. That's why. Yeah, I mean, if you break out above this, retest it, and if it holds as support, I don't see why you can't be a buyer of algo. Or you could watch daily support moving on from here. Remember, you're like, since you put in support for a couple of days here, you're likely to see a daily trap, a close under. If you get a move lower, then I would be a buyer. As long as the next day doesn't give me downside continuation, right? As long as we're trading up from the day's low. What I mean is this. So like if you close like this, right? That's a pretty little candle. If you close a candle like this, I could be a buyer here. As long as the intraday price action, because this candle is going to open here, you're going to see it more than likely go down like that. And then maybe even on a 5-minute or a 15-minute chart, you might even see another down, right? It might look really bad, but at any point in that day's range, if it gets back above this and starts bouncing off of this intraday, I could be a buyer. Looking for something like this. All right. That's what we look for. We're literally looking for them to set the trap, lure retail in to the downside, and then buy it. So I'm going to say this one more time because I know most of you probably heard it. We were bearish on this when we broke down here. Okay? I'm just trying to get you all to see price the way that I see it. That's all I'm trying to do when I'm beating stuff like this into your head. I'm not doing it to talk down on you or disrespect you in any way. It's literally just, I'm just trying to get you to see it. When we broke down here, this is the break of the uptrend. This trend was taken on a 4-hour time frame. So it literally it encapsulated all of the downside 4-hour wicks. So we were a buyer. We had a bullish bias on this based on the daily 21 exponential moving average and based on the RSI on the daily time frame. So you're above the 50. So we said it's still bullish, right? But since we broke down below that trend, we could look for a trend reversal to the downside. But if we get back above this range, this will be a bear trap. That would be a trap if we got back up into here above the blue line. So as long as it stayed under that daily midpoint, we wanted to be bearish. This is the breakdown day. This is also your trap. So as long as price is trading under the midpoint of this candle, we can have a bearish bias intraday. Well, we're not going to see that. All right, I'll go to the hourly. Here, I'll just redraw it. So here's the midpoint. As long as we're under that, we have a bearish bias looking for price to continue back to the downside, because this is a breakdown. If you get above this, then it's a fake breakdown. It's a false break. And we no longer want to be bearish. We want to switch our bias. Our daily bias was telling us that we were still bullish on the daily chart. So we still had an overall bullish daily bias. And this is what happened that day. So this is 2 a.m. This is a London session. Right here. So here's your 2 a.m. candle. You did break above the 50. That's okay. But now we want to see it roll over at 2 a.m. as that's your London session. So your London session sometimes sets the daily high. It doesn't always set the daily high, but we know sometimes it does. So this is where we want to see the rejection. And then this is what happened. Okay, so if it's a trap, then in New York, we want to see it continue down. Here's New York, the next hour. New York showing us it's a sell. And we're getting downside continuation. So our shorts are looking good at this point. Boom. Okay, so from this point beyond, we have a bullish bias, because our downside bias, if it was going to, remember, we can't predict price. We can only anticipate what we assume it will do. That's not predicting. It's different. So we're not going to beat our heads off the wall trying to short this. The daily chart's telling us it's bullish. This candle is telling us that the bears are stuck. Right? They're stuck. So anybody that's short based on this larger term formation here is stuck. And it's going to probably go up. And then here's what we got after. So I can't predict price, but what I can do is tell you when something like that might be about to happen. Right? This is a failure. That's failure confirmed. Look how aggressive those candles moved up afterward. Very aggressive. It moved so aggressive. You got 1, 2, 3, 4 days of upside continuation. That's how stuck they were here. That's how stuck they were. So that's what we're looking for. When I tell you ahead in time, like if I'm doing a live stream right now and I'm telling you to wait for the daily close, it's because I want you to see if you're in an area where you're getting ready to potentially change the trend. So from this point, we were looking for the trend change. It did not happen. So was everybody. But at this point, we were bullish. We weren't going to go in there and try to hammer short the next day. We already knew that this is when we wanted to switch our bias from bearish to bullish. Okay, we have something similar going on with Hypecoin right now, or Hyper. It's not Hypecoin, it's Hyper Liquid. It's an exchange. This is a bull flag. A pattern that retail can't be patient enough for. So right here it is. Here's your breakdown right here. So at this point, this is when you're getting interested to be a buyer, not a seller. Yeah, you can see downside continuation, but what's your daily chart telling you? Well, here your 4 hour is bearish, so your daily is probably close to flipping. Nope, it isn't even close to flipping. So you still have a bullish bias when this happens because your daily time frame says so. So when this candle closes, you can watch the low of that candle for a liquidation. If you get the liquidation, if price trades under the wick, that's going to force liquidate buyers. If it trades back up into the range, as long as this holds intraday, you're no longer a seller. You can be a seller once the daily time frame tells you it's time to change your bias. Because by that point, you will already have multiple, like 2 or 3 days of downside. Or the bears are showing you that they are in control of the price. They're in control of the chart. So that's how you keep your bias. Let your daily bias keep you on the right side of the chart, even on a liquid, even on an intraday basis. Like, you can look for short scalps intraday, but make sure you're only taking one shot at it, not multiple shots at it. If your daily bias is telling you to be bullish, but the 4 hour, 1 hour, 30-minute chart's telling you it's breaking down and you want to have a short side bias, okay, have a short side bias, but only one time. If you get stopped out, you're done for that day. You wait till the next day because there might be a longer time frame thing setting up. That's what I'm looking for a lot of times. I'm looking for that higher time frame set up, and I'm looking to position myself to catch that. That's why I caught the penguin long. The sellers had the control of this thing since Friday. Whenever sellers are in control of a market, you get big moves lower, fast, big moves. If you're not getting fast, big moves lower, then the sellers are not in control. The buyers are. When you see one big down 4 hour candle, that doesn't mean the market sentiment has shifted. That just means on an intraday basis, there might have been news or something. Look at this. That's a freaking bullish engulfing. And then the bearish engulfing. And then up it went. Like, that's intraday chaos. There's not a day trader alive that can tell you. I mean, we do really good at scalping these ranges. We do pretty good of anticipating that exact theory. So scalping and holding are two different styles of trading. They're two different strategies. If you are only scalping, then you're getting in and getting out. That's a scalp. You're not holding. If you're looking to hold even a small piece, then you need to be on the larger time frames schedule, because you're looking for continuation, right? That's what you're looking for. That's why you're taking profits, moving your stop, because you want to see it continue to go in that direction. So for that, you have to approach the markets completely differently. But if you're scalping it, you can scalp these ranges. I have no problem with it. This is a 4-hour bullish engulfing. So you know, going into this candle right here at this point in the day, this happened at 12. Let's get rid of this. Let's get rid of that. Let's get rid of that. Let's get rid of that. You know, at 12, when this candle closes, you're going to open a new candle. If you get above this high and fail, where are you likely going? You're likely going to the midpoint of this candle. Here's the 50. There's the midpoint. So we can play this out, because this is the close of that 4-hour candle. So the very next candle is going to open a new 4-hour candle. And what did it do? It took out the previous 4-hour candle's high and faded. Okay, so you can short that. Stop up here. What's your target? Right there. But you're not going to take profits right there. You're going to get out. You're going to exit the trade because you're scalping it. Boom. So you're out. You're done. That's a scalp. One in the books. Now what? Well, according to the larger time frame chart here, forget this because it cheated. But anyways, if you're going to get downside continuation, where's the next target? The low. Has to be. It has to be. If you're going to get downside continuation on this 5-minute chart, then your 4-hour wick low right here is your target. Because if you're not going to rotate back to bullish here, which we were expecting, because at that point, we're long, we want to see it break out. But we're expecting it to go up and continue from this point. But if you're just scalping it, that's your target. Your new entry is going to be a lot more hard to get if you're aiming for this low, right? Because now you don't really have anything. You've got this candle's close. So that's where you want to see it hold, at least if you're targeting this low. Okay, so time has gone on and it has not really been able to trade away from the midpoint. So if you did short it again, aiming for the low, you did okay. Boom. Okay, so now at this point, on the larger time frame, I become a buyer. Why? Because my daily bias is still up. I know that these scalpers that are causing this intraday chaos are likely done at this point. Where's the next target? It has to be where? Here. Has to be. Because this wick took out that low. It took out all of these lows. So if you're going to see downside continuation from supply, you want to see it reverse at supply and head lower. This is supply. So if you're trading above that, then it's not really a short. It shouldn't. If it's going to be a short, it should roll over and go lower, as this is the new downside target. But I have a bullish bias, so I know this is the target. So as long as price is trading above this swing low, above it, then my bullish bias on the daily time frame stays intact. under this low, I know this is the target. So I can exit my long position and wait to get long here. I'll take a small loss because of fees and whatnot, right? But I buy there and I wait to see what price does. If it starts to go lower, then I know this is the next target lower and I don't want to be in it, because I will want to buy a retest of this wick and then I'll look to buy it down there. But I know I want to be long. So here's a new candle. There was that target. So if price is aiming for this, then it should what? Migrate lower. But I'm long. What's it doing? That's actually showing me this might be a long. So now I'm not even threatening. My position's not even being threatened at this point. Now I know the shorts that are trying to get downside continuation from supply, they're the ones that are being screwed, not me. I'm good. I don't have to do anything. I don't have to do anything until price gets back down here. Now, you can clearly see what's going on here. This is a higher low than this low. So like, boom, 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 the sellers are winning, the sellers are winning, and then this happens. That should have instantly told any sellers it's time to get out. Like, that's not a sell candle. That's a buy candle. Even if it does rotate back lower, this is a buy candle. Somebody stepped in there and it was big. Now look, now you got a higher high. So these shorts are ruined. They're already out. At this point, I'd say they're done. Dunzos. So now we need to reprice to look for what? Sellers, because these sellers are all gone at this point. All this supply, based on supply, is out of the market. So this is where the market was repricing to get that supply, based on that 4-hour supply zone. So now that you've liquidated those people, traded back lower, it's intraday chaos. You can't nail every 5-minute candle. You would do better nailing the 4-hour candles. They're done. So now it's just, price is just going to reprice until it finds supply. So that's a hold trade. Even though that bitch looked like a freaking bearish short, like that's a bearish engulfing. What did it take out first? What did this candle take out first? The bearish engulfing's high, not the low. That's not great. That's not great news for shorts. So just whatever time frame you choose to trade, please understand your biases. Please understand, like, you cannot predict those intraday ranges. We cannot. It's too chaotic. There's too much stuff. There are billions of people in this world that are basing trading decisions on a billion different reasons every second of every day. It is going to be virtually impossible for you to time an intraday market or predict an intraday market. But we can do pretty good at navigating it intraday because we know what we're looking for. This is an inside candle of this candle. So this candle, it found its supply. So the sellers from here are targeting what? This low. They need to see that low. That's their target. The scalpers. Anybody that shorted daily supply is looking for this low at the minimum or the midpoint of this candle. But this candle closed under the midpoint. That's why you're seeing downside continuation from here. Because there's the open, the close. So when this candle opened, it spent very little time above the open and it dropped back under the open. Let's look at it. We can suss this out right now. Replay. We'll play 1. Not 2, just this one. I guess it won't let me replay that. But I can replay the 8 o'clock a.m. on the 5-minute. I can just do that, right? So where's the 8 a.m.? Right here. So I can replay to there. Okay. So we know supply stepped in here because it's a supply candle. It literally is a supply zone. So we know people took profits when that got hit. We also know new sellers jumped in, shorts jumped into it. Either way, we know that. So the midpoint first, 4 to 8 of the midpoint first, because these markets calculate on midpoints. That's why they're so relative. This candle closed under the midpoint right here. So this is the high. That's the target. So for buyers, any buyers, this is their target. Any sellers in here, I don't know where they're going to short. The open is the only place they got. They can short the open or a retest of the highs. That's it. But look how much time price spends above the open here. Okay, so the sellers at the open are aiming for what? The low. They're aiming for the low right here. This is the low. That's what they're aiming for. The sellers that sold the open, 8 a.m., they are looking for a retest of the open. They should be seeing it sometime soon, right? Because when you sell, when it's selling, it goes down quickly. Buying goes up slow. You know the old cliched saying, right? Stairs up, window down. Out the window, down. That's what a bear market looks like. Or an elevator down. I like to prefer bear markets is like, dude didn't take the elevator, dude jumped out the window. That's what a bearish candle looks like, usually, right? Yeah. No elevator. It's a literal fall. That's what's bearish. So that's what they're looking for. That's what they need in order to be right in this market. So this is going to force close. This is their entry. Because this new candle just opened and it's only spent a couple minutes above the open and then it immediately dropped. There's a retest of the open and it immediately dropped. So back up here, the sellers could be wrong. They don't know that they're wrong. They could be wrong. Look at this garbage. Like, do you retake that trade? Do you exit? Do you hold? What do you do here? What do you do? Just think about what you do here. Are you taking that? Or are you going to set in this loss knowing this is where it could be going now? It's got to go to the high. You're above the midpoint? Well, not on a close, not yet. I guess you could hold it. You could hold the short. You're still not closing above the midpoint. Remember, this is the midpoint of the previous 4-hour candle. We're just now making the new 4-hour candle. So sellers sold the open. They didn't get a chance to sell the high of the last 4-hour unless they sold up there. Then those people are still in the market. They're not being threatened. These people are being threatened. The new sellers. So the market has to deal with them first. Still haven't closed the 5-minute candle above that midpoint. That means this white line right here is still the target. It is still the target. Looking good, looking good. Now buyers will step up here because this is the 786 of the previous 4-hour candle. They don't know that they're going to be right, but they will step up here as long as you're not closing under it. Because if they know if you're closing under it, the chances of this being hit become a lot more probable. So right now, we just smoked the sellers at the open again, but then immediately reverse. So this is just creating FOMO. This is the market saying, hey, you, I know you want to short me. I know you want to. Look at me. Look at me. I want to go down. Look at this big candle here. Juicy. If you're watching on a 1 minute, it's even worse for you because you got 4 1-minute candles in a row, just down, down, down. That's pulling in liquidity. That's what a candlestick's job is. It's working. It's doing its job. Its job is to pull in liquidity. It's directing the sellers to come in. Just like when you get these moves, that's pulling buyers in. It's causing people to chase price. This is why you're always getting in at the wrong times. Also, you saw this, you probably waited 5 minutes before you hit the buy button, and then instantly this happened. And that doesn't look like a big move, but if you're using leverage, that's a 2.5% move. That's big, man. That means if you jumped in with a small piece of a trade, like $200 with 20x leverage, that's like a $40 loss. That's big. That's huge. That's what it's doing right now. And it's impossible to guess what's coming next. It's impossible. The buyers are going to step back up here again. Why? It's the 786. We still haven't taken out this low yet. So this is still the target. Now this is probably the target, and then obviously the new wick there. But still, the market is just basically playing games with all these people. And here we are. Like, we still don't know who's going to win this battle. Not yet. But we know where the liquidity is. We know people will get stopped out here and here. And we know that the target for the shorts is here. We just don't know if we're going to get continuation or not. And that's what everybody wants. Continuation. They get in short here. They want to see it move. They want to see it go back to 0. And if you bought it here, you want to see it go to 1 million, right? We can do a pretty good idea. We get an idea. The charts tell us what's going on. We just got to look at it and decipher it and tell it for ourselves. But for people that are long down here last night, this is not threatening them at all. So they're not going to be moving anything. They're not doing nothing. So right now the market's just taking out all the new day traders today. And it still hasn't given you a clean signal. A clear anything yet. You can be short targeting this low at the close of that last 4-hour candle. But above that, then that high is going to be threatened. Here we are with bonk. So I'm getting my move, right? I wanted to short a retest of that purple line. We got it. Boom. It came back up. It retested it there. It's repricing lower. This is what I want to see clearly if I'm short. But if price reverses, have we taken out the previous 4 hours low yet? We haven't even taken out this 4-hour candle's low yet. We're trading under 5 days open. That really don't matter because what matters is right now. Right now. What's going on right now with this candle? That's what matters right now. There's your downside target for now. as you are under the midpoint of this candle. So right now the sellers are looking okay up to here. So from the 50% to here is going to be, that's your chop zone. That's where you're likely to see chop until either demand or supply is exhausted. Then you will reprice. And you will look for either this low or you will look for this high on that repricing. It's the only place it can go. It cannot go anywhere else. Now it can blast through that clearly, but I'm just saying, at least for the probabilities, like if you were to put a Gaussian channel on this, like that's what it would look like, right? This is the probabilities. Your Gaussian would look like this, right? But you would have a million. These are all the areas that price can go in the next 4 hours. Clearly it can spike way out of this range down in here, but chances are eventually it'll go back in it. People are making decisions on those prices right now. So as long as you're under this, the sellers they're not in control, but they like what they're seeing. At the very least, they don't have to do anything. It's not until you get above the 786 will I have to do something. I will have to either exit or move my stop or add or whatever. I will have to do stuff in the market. So clearly the buying exhausted above the 786. Why? Because the threat is where? Here. I mean, that's their target. That's not very sexy for a buyer, is it? If I buy it here, where could it go in theory? Well, in theory, here's the target. I'm not going to buy that. Okay, so you run out of buyers, demand is exhausted, then you get a repricing. Looking for buyers, sorry. When price is going down, it's looking for demand. There was demand here earlier, it's dried up. So these buyers exhausted their positions here. Now we're going to look lower. As far as fibbing from up here to down there, I guess technically you could do that. Like that is also, wait, that's how I drew it the first time. So let's go up with it then. There we go. Okay, so this is probably where we're going to see, this is probably where price, if it doesn't just continue to reprice. Because these buyers down in here, if the candle stops here, that will pull in new demand. New buyers will step up. Depending on what price does, what the candle do. What do they do here? You're massively oversold here on a very small time frame. You're very massively oversold here on a buying or on a 1 minute. You're about to hit oversold on the 5 minute. So buying algos will fire up here. People will buy here. It's the 786. Buy here, target here. If it stops here, that's a likely target. You might not think that's very big money, but big positions, that is good money. How big is that? On zero leverage. That's a 2% return on investment. So without leverage, if you bought 4 million bonks right here, you could receive a 2% return on that investment just by going back to where it is probable. Not likely, probable. Traders are operating on probabilities, not likelihoods, not like not prediction models. So you got liquidity providers that will absolutely love to throw on risk right here, take off risk right here. Is there enough demand at this point to stop it from repricing lower? That's what we're waiting to see. That's what's waiting right now. We're waiting to see that. So this move lower, since it's already pretty much massively oversold, is probably just going to be the buyers are buying it right now. That's why you're getting that big move lower. You got demand flooding into the market right now. Just watch this. Just watch it. You can literally see it. I mean, look at this, guys. This is a 30-second chart. Look at those closes. Boom. Right down here. Up. When you tag this level, you're going to basically spur on more liquidity. Whether it's it's going to be both sides, right? You're going to stop out longs. So longs are sells. So you're going to hit sells down here. So there is supply down here. Is there demand? That's what the market's looking for. That's what it's looking for. I wouldn't buy that based on this. I'm just saying, you've got algos, you got liquidity providers, you've got so many millions of people taking trades based on different reasons, right? That's why it's impossible for us to predict even 1 minute candle ahead in the future. Do you realize that if I knew when this candle closes, well, here, let me just pull up this. If I knew what price the next candle 1 minute away was going to be, 1 minute ahead, I would be a trillionaire. If I could just enact that ability at any point in time, if I knew what the very next 1 minute candle's price was going to close at, I could 100% be a trillionaire in a year. Because I can't lose. Therefore, I can keep betting max everything every time. Because I know what the price will be. Just by getting a 1 minute ahead in the future advance. Give me that 5 times a week. Just 1 minute in time, 5 times a week. I would be a trillionaire. It's because we don't know where it's going to close is why we have to use stops. And since we have to use stops, we can't predict what price will do. But we can do pretty good. We can build models around probabilities. For sure. And that's how we do this. Oh, damn it. I got killed on the... I didn't have a stop loss on the penguin. And I got killed on it. I'm not losing a lot of money. Because... Here, I'll show you. I don't want you to think that, oh, he's lying. He's getting his ass raped. I'm not getting raped. So I'm getting raped on this. But this is covering it. So I'm going to close this. And keep this. Clearly. So I did get beat up though pretty bad. So I'm only making $200 here on that short because of that. That's my bad, but I'm not going to sell it right now because I'm expecting a bounce here, but because we just hit targets. I'll let it bounce a little bit and then I'll close it. Not much. I don't need to hold it. Because right now the positions are all setting each other. So I mean, really, it's not to my benefit or to my detriment. We still haven't hit targets on bonk though. But on penguin, I'm pretty sure targets were just hit. Yes, they were. They were hit. Okay, so now what? Well, now you've got a big range here of potential. But you just keep going down in time and you'll see that those ranges will get smaller, right? Because the candles are smaller. Next target is right there. So if it fails here and starts to bounce back up, then the Gaussian channel is going to shift from being up here to down here. It just keeps shifting with price because price keeps aggregating in both directions, up and down, up and down, up and down. It's the repricing metrics that we're trying to catch. Those are also the things that are impossible to catch. But we can do pretty good if we're just scalping. Scalping can pay you as long as you're doing it the right way. As long as your targets are probable, you can absolutely do great in scalping. I plan to wait until Pi Cycle top. Pi Cycle is a pretty good indicator. I don't have it on my charts, but a lot of people look at it for sure. Absolutely. I'm wanting to see let me see if I can let me see what we got here. If I can get a midpoint check, I'll close the penguin. We might not get a midpoint check on the RSI though. It could literally just roll over here. But it would be nice if it could give me this. And I can exit that losing trade. For now. Yeah, we don't know where support will show up or if it will show up ever. That's the problem with trading. That's where people find it like so hard to make money doing this, but it isn't that hard. It really isn't. You just got to make sure that you're watching and paying attention to the risk you're throwing into the market. You got to make sure that you're getting filled at the price you want to get filled at. Things like that. Things that affect your P&L negatively, you got to pay attention to. Like Bohm the other day when I was doing a live stream, I exited the Bohm trade. I was up in profits by like 30 bucks. I closed the trade out, but still lost $12 off of my money. How? When I was up on the trade. 30 bucks was my unrealized P&L. How did I lose 12 bucks? Well, I lost 12 bucks because the fill was shit. I hit exit and it filled me at the nearest market price, which was shit. That's why you want to trade assets that have enough liquidity in it, so that way you get filled real close to price. Let me go ahead and get out. $80 loss is much better than $170 loss, right? All right, so now that price is working for me on that bonk short. I don't really have to do anything or have to worry about anything. Until we get up to here. If we're trading above this up here, I have to worry. As long as we're below this right here, then my probabilities say this is probably still the target. But above that, then the probabilities shift. So if you're scalping entry, you could literally throw your stop down to there and then you'll be guaranteed to make money. Just because you got your move. Now you can force exit the trade and get the money up to that point. So you'll make whatever the difference is from here to here. So you'll still make money. What is it? It's 2.9%. That's a fantastic return on any investment, especially if it's taken 5, 15, 20 minutes to do. Yeah. It's the high leverage and the big money, the Ferraris and Lambos, what people want. But when they realize that you can literally scalp 2 and 4% moves out of these on a consistent basis, like, why wouldn't you do that? Why not? It's not big money. I can't go buy a Ferrari with that money, but that's going to go in my P&L. And then the next position I take, in theory, could be larger. I don't have to up my positions on every trade because I use leverage, and leverage is a tool. But it's a double-edged sword. It will hurt you just as bad as it can help you. This is why I refuse to let trades that are winning turn to negative. Ever. Never do that. You are the only one that can control that. Only you got the power. If you take a trade and it is green, if you let it turn red, that is your fault. Not the market makers, not price action. That is 1-800 yo fault. You could have exited on a profit. You just didn't want to because you were greedy. You wanted more, right? Ain't that the reason why you never exit a position when you're in it? You want to make more? I get it. I do. I've been there. Making something is always better than losing something. Always. Use that mindset in your trading from here on out. Your P&L will thank you for it. Refuse to lose. That also means you have to be a lot more picky with your entries, of course. But if you refuse to lose, your P&L will grow. Be picky with your entries. I didn't chase when it was down here. Would you have? Or better yet, did you? So you knew I wanted to take a short if we retested this level. I was running my mouth when we did retest the level. I wasn't looking. When I got over here, we were down here. So do I short that? No, I do not. I wait. I get my price or I don't trade. If it keeps going down, I'm for sure not chasing it because I have no edge. My edge is it reverses at my level or I lose. That's my edge. I can't make it do it. I don't know if it will do it, but that is my edge. If it does that, I will make money. That's my edge. That's what I do daily. That's my job. That is my job, man. So yeah, this thing is rotating back to the upside. If the sellers are going to get control of it, they need to keep it below here. So the indicator needs to cool off. This is good. This is what we want to see. We want to see it hit overbought before we get back up here. This is good. But remember, it can stay oversold or overbought for a long time. So like if you bought it there, you can see what happened. It never did bounce for you. You have to be quick if you're taking trades based on that. You have to be quick to decide what to do. If we bounce from here and start heading back lower, I don't have to do anything. I will have to do something if price gets above here. And the market knows that. The market knows that I will be forced to do something. I will be forced to close the trade. And as long as I make over $90 on this trade, I will make money. Because I lost money on that stupid trade that I wasn't paying attention to. Love it. But I will make $90. If price gets up there, I will make $170. Some people get mad when they get forced out of a market. I do too. I mean, it does suck to look at these things in hindsight and be like, damn it, I missed that. Yeah, damn it. I knew it was going to do that. I could have went in large with biggest position I've ever traded with. As soon as you do that, It's going to go against you. You've already lost. If you're thinking that way, you've already lost. If you're thinking that the market moved because of you, and now you're going to go in heavy, extra heavy with extra big leverage because you're going to make so much money, you've already lost. It's already over for you. What do I think of Bitcoin Cash, BCH? Let me set my stop loss. Because I start running my mouth. I don't want to get wicked out of this. It's bullish. It's up 7%. So just that fact alone says that it's probably going higher. I just moved that line. I got to get the exact price. But hang on, I got to do that up here. So my stop loss has to be 35,755. And I want out all of it. I don't want to lose any money. Dude, I've already, like I said, this is a good return on investment. I mean, 589% on $200. I'll take that every freaking, if I could do that every single day, I would. I can't. But that on a percent basis with the amount of capital that I was trading is what that percent is reflecting. It's not reflecting the percent on my overall capital. My overall risk portfolio. Like I have $15,000 on exchange, that is my overall risk capital. So that's a 10% return almost on that. And that is a phenomenal week. Already, the week is already good. So to get stopped out of this, it's just going to add to the good, right? It's not a negative. It's not a bad idea to get stopped out of a winning trade. Now, I like this close here. This is nice. Very, very nice. But at the same time, it's not great because this candle closed up when it could have closed down. So now people are going to be watching here, moving forward, and then there again still. So now new positions can be added right here. But there's still 4 hours, so my stop is situated. I'm good to go. Let's go look at BCH. Bitcoin Cash. Let's look at this on a large. Let's go get yearly. So we definitely look okay on the year. You're trading at yearly highs, which is good. It's bullish for the year trend. As long as you're above that, your yearly trend is up. Looking good in the month of July. You're trading above June's high, which is good as long as you can hold that. Right? Objectively, as long as you can stay above. Wait, I did that too fast. June's high, then the risk is to the upside. Because you are a trending monthly candle at this point. Last week was when you did it, closed above it. That's a good looking weekly candle. Notice where the midpoint of this week candle is. Where is it? Right here. That's June's high. We ranged this with a fib. Oh, it's the midpoints up here. So it's a little bit lower than June's high, which is good. So June's high and the 50% retracement of last week's range is where we want to see bulls defend. So pulling up our indicator, we had a lot of bullish momentum yesterday. That's good. Today we're losing that bullish momentum. That's okay, because on a daily time frame, in the context of trend, this is still up. That's the wrong indicator. You're still up. So this is a buying opportunity according to daily chart traders. For them, this still looks okay. If you bought yesterday's open, you're still good. You do not have to worry yet. As long as price can stay above that, I don't see any reason why I'd want to be a seller. Okay, now on the 30-minute time frame here, you are losing your 100. That's not really good for the very, very near term. But that doesn't mean that the sellers are in control either. They're not being able to get downside continuation each time they've lost it. So the uptrend is still okay even on a 30-minute time frame. When does it start to look not so great? If you start closing 30-minute candles under 525.76, that's your lowest closing 30-minute candle in this near-term price action. So that's the price that you need to see defended on a 30-minute closing basis. Otherwise, you're going to potentially see an expansion lower, but this is your target down here anyway, so that would be okay. You can still remain bullish on the daily time frame, even if you're closing 30-minute candles as low as here. But for me to keep that bullish bias for today's range, it would need to hold that. So what would my trade be here on Bitcoin Cash? I wouldn't do anything here. There's not a trade for me to make, as the sellers look like they're getting ready to smoke the last 4-hour low, and then after that will be the next 4-hour low. So like, I can't buy or sell this right here. I can't do anything with this. We're already under the daily point, the daily's midpoint. You're already well under that. So I can't buy it based on a midpoint test, can I? On the daily midpoint. No, I can't, because we're currently under that. So right now, at least right now, the sellers are in control. So there's nothing that I can do here, because I can't know if the demand will, if the supply will dry up here or not. It does look like demand is coming in, but we don't know that it will hold. So I can't do anything until price gets down here. I mean, I could try to buy the intraday support, but I know that if price continues lower, that on the larger time frame, it could come down to this. This is that weekly range expansion. So this is where support needs to hold. If we're trading under it, I still won't buy it. I'll wait till price gets back above it and hold it. Then I can buy it. The price can go under it and stay under it all at once. I just won't buy it. But if price gets under it, gets back above it, and then holds it moving forward in time, then I could be a buyer. Where I'd put my stop would basically determine on what's happened to that point. But right now there just isn't a trade or an intraday trade to make on Bitcoin Cash. I would go as far as say, as long as the daily, yesterday's open, stays intact, meaning you're not trading under it, then you could potentially be a buyer anywhere around there. All right. As far as long term, you want to see price stay above June's high, because once you're under June's high, you're no longer a trending candle. You're back inside of June's range. Being back inside of June's range threatens more downside. Because sellers will look at the chart and they'll be like, well, it can't even maintain bullish momentum above June's high. So on the month, it's a little bit weaker, right? So as long as it can hold those levels, I like it higher. It'll be up to you to determine where you want to attack this market as far as put on a position. Now, if you're holding this because you just said, what do I think about it? You didn't say, hey, I own this at this price. I want this. All I can tell you is what I would do. I wouldn't do anything right here, right now. But if you own it lower, I think you're okay, depending on where you bought inside of what candle's range. Like why you bought it. I don't know why you bought it. I don't know what you're looking for, what your target is or anything. But in the context of normal trade, it looks good. It looks okay. The buyers are clearly in control for now. Clearly, this thing is bullish. It isn't today, but it is overall. The trend is up, right? The near term, daily, weekly, well, not this week, last week. This week you're bread, but this is the first day of the week. You could be just setting the weekly low right now, which is probably what you're doing. You're probably just looking for a low, the weekly low. Where that will be is impossible for me to tell you, but that could be what is happening. So look for support, June's high or the midpoint of yesterday's range. You want to see that support holding on a larger time frame. 30-minute, 4-hour. You want to make sure price is trading away from that, not under it. And then the trend looks good. TX chart is nutty. That's Tron. Yeah, I don't understand why that thing is so bullish. I mean, if you look at this on a year-to-date basis, it looks good, dude. There's your yearly open right there. So you're making fresh yearly highs. I don't know why. Obviously, people like it. They love it. They love the Tron. It's making fresh yearly highs right now. So you're up on the year. You're making fresh yearly highs. You're not making fresh 2-year highs, but yearly. This year it looks great. This year it looks great. This month it looks great. Yeah, I mean, you're a trending candle on the month. And that trending candle's midpoint is above last month's high. This is a bullish trend. Even on the daily, you're still in the context of a bullish trend. Even on the weekly, this thing is up, man. It's strong. It's right now sussing out direction. Sellers think they're in control of this. They are on the near term, but it won't take much, I don't think. Right? So there was your breakdown. Now, clearly, the market didn't know at this point that was going to be the midpoint, but look at it now. Support, breakdown. So for now, the sellers think they have it. I wouldn't love the short since you've been going up 1, 2, 3, 4 hour candles here. That's almost a full day. Not being able to get back above that moving average, but I don't hate it either. I like it. I think as long as it can stay above, I like it higher. If it starts to cut loose to the downside here, it's going to be a little bit more like threatening. So just on the near term. So there's your 20, there's your Sunday open. So that's the weekly open. Let's see where we are. Yeah, see, this is when you start getting into trappy territory right here, right now. Because volume on the weekly is under the VWAP. So the sellers think they have this. And they do, as long as you're closing 4-hour candles under that. So if the sellers are going to maintain what control they've had, they need to hold it here, right? They need to. If they lose it here, then it becomes back bullish. So you're in a very, very high activity area, meaning you're going to be wicking out both longs and shorts here. So in like intraday scalping is going to be difficult here. Very difficult. I can tell you one thing here on Bonk, it is struggling to get that low target, that 4-hour wick low. Every time it tries to get there, it fails. I don't love that. This is where it needs to get. If it can't get there, that literally means demand is coming into this. It doesn't mean that demand won't come in under it either. I'm just saying it as of right now, it's struggling. But it did roll back over on the near term, so that's nice. See, I don't know that target would get hit. If I did, I would just short it. And I would take my money and run every time. That's the problem. Predictions, they're impossible. But yeah, as long as BCH holds that where it's at right now, I think you got a chance that it can keep the bullish momentum alive. The sellers have had control of it for the last few days, but that's just a pullback. It's not like it's a bullish pullback. It's not a bearish pullback. On the near term, on the 4-hour chart, it looks like a bearish pullback. But anybody that's not keeping an eye on what's actually taking place on the longer time frames, they're going to get wrecked. They're going to get wrecked if they're not paying attention. It looks like the sellers are in control of this, but they're not. The bulls still are. I would still be a buyer on this. On liquidations and moves back into ranges. So like if you get a downside break of this low right here and you get continuation, then you're going to have to wait until the next 4-hour candle opens to see if you liquidate that low and get back in that range. Right? Because right now, this is the target. So you can't do anything right now because this is the target. But if it gets down there and then back in the range and then closes up in that range, then this right here is the point to look for long entries. If you liquidate and run back into the range. boom, boom. As long as this area holds moving forward, then that's where you put on risk. On the near term. And the same goes for TRX, but with TRX, they're a little bit more. Right? It's right now fighting with this intraday, this intra-week stuff. And liquidations on this are all the way down here, unfortunately. But I could still just watch this even. But my scalp, it would just be a scalp. It wouldn't be like a long-term hold. Go in small, go in looking for just a small range target. I don't know if this moves that fast or not. If this doesn't move fast like Bonk and Penguin and Fartcoin, then I would leave it alone. Yeah, it doesn't move. Like that whole 4 hour range is only 1%. This entire range is only 1%. So scalpers aren't loving this asset. Not like they are the other ones. This range on this 4 hour candle is 9%. Like there is plenty of opportunity inside this range in this blue box. Plenty of opportunity. $6.9%. Like so much opportunity. And you did just liquidate on weeks. You did just liquidate. So target hit. Target hit. Not bad. And that's going on to the 1300 we've already made today. Not bad. Minus 90 bucks. Minus 90 bucks. But yeah, not bad. You don't need big money to make decent money in the crypto world. You just gotta know what you're doing. Sand, please. And Liteco. I've never traded sand, so I don't know what it does, if it's a big mover or not. It's moving big now. It's a 2% move. It's not a huge mover, but it is a mover. So yeah. I mean, as long as this candle is open, holds, which it's not right now, but this might not. We just opened a new 4 hour session, so there's a good probability with this weakness here that this candle closes with this as the midpoint. So this range right now on sand, by the time this candle closes, might actually look like this, with a wick under here. That's 100% possible. But it needs to keep that downside Momo under 34 cents. I don't know if you're long or short or what. You just said look at it. So I don't know what you're doing with it. It's down on the year. I don't love that. But a lot of cryptos are down on the year. Not all of them are up on the year. Risk markets, most everything is up. Looks really good for this month. As long as you're above that, you're trending. You're still inside of May though. So at some point, May's high is going to be coming into play. Maybe, right? We don't know that it'll get up there, but that would be the target on the longer time frame, like the monthly buyer holder guys. Anybody that's partaked in longs in this month, above June, this is their target. We don't know if they will be successful or not, but it looks okay. So on a pullback, a very small pullback, like that could keep it bullish and keep yourself looking for that target, I would need to see the midpoint hold. I don't care if you get a wick under it, but on a weekly closing basis, I want to see it hold. If you close under it, that's going to bring in more sell side, because sellers are going to think they have a chance for last week's low. So there's really nothing to do here right on the near term. You're going to have to watch the weekly open as of this week. So Tuesday, Wednesday, Thursday, Friday. You're going to be focusing on where is the weekly open in regards to price. What is price trading at? Is it above or below the weekly open? If it's below the weekly open, well, of course, these are going to be the first targets, but ultimately, they're looking for that. The longer term, this is a big target. You're not going to get there in 4 hours. You might not get there all week if the demand comes into sand. If there is demand for it. If it is a buyable asset. But it is bearish on the year. So anybody that's participating in it right now, they're just trying to participate in the crypto market alt season. Right? That's what they're wanting to do. They want to make money in the alt season. So that's why they're buying sand. I don't know what it does, what its white papers are, what its objective is. Is it an exchange? I don't know anything about it. But it looks okay on the very near term. Keep an eye on the trend. Make sure you hold it. For now, they're holding it. It's overbought. So, I mean, really nothing to do on the near term. And because it's overbought, that also makes this less likely to hold. Or if you get down here and start trading under it, because at that point, it'll still be well up. That indicator might want to cool off a bit. And then again, it might not. It might just want to keep going up day after day after day. I don't know what it'll do. It looks okay. It looks like it wants to go higher. As long as you're above June's high, I like it up there on a longer term basis. If you lose June's high, then you could potentially see stronger weakness, like bigger weak candles, bigger bearish candles. And then Litecoin, we just looked at Litecoin. I think I have that on watch yesterday. Yeah, it's looking okay. This is up on the year. So people, like, I thought everybody got out of Litecoin, to be honest with you, but clearly people are still buying it. The long-term holders are never going to accept. They're never going to leave. Especially long-term holders that are long-term holders because they bought Litecoin at insane prices. I remember trading Litecoin. Litecoin does move pretty good. Or I was just way over leveraged. Because I remember making money on this thing. I also remember getting hurt. Yeah, it's a fast mover. That 4-hour range is 2.6%. That's a big move. So it's a fast mover. So that's what it is. People just like trading Litecoin. It's not an investment vehicle. It's speculative. I think the use case for Litecoin is done, I think. So mostly now it's just a speculation vehicle. It looks okay. I like it as long as it's above the yearly open. For me, that's always good. That means your yearly trend is up. You're trading outside of May's range. You're still in February or March, sorry, but you're doing something that other cryptos can't or haven't yet. A lot of cryptos are still trading inside of May's candle. Litecoin is not. It is expanding to the upside. It is a bullish monthly candle, but you're trading up at those monthly highs right now. Today, you just made a fresh monthly high. So I don't know what you're looking for on it today. I mean, if you just like to look at the chart because you bought it much cheaper and you're like flexing, good. Keep flexing. It looks great. It looks great. Some things are pulling back a little bit here. Fartcoin did pull back all the way down to 8%, and then now it's bouncing again. So buyers are still trying to do it. Look at Penguin, poor Penguin. It's going for those lows. Those are going to be 2-hour lows. No, hourly lows. This might be a buying op. Wait, what's next? Sweet. Way down there, huh? Oh, yeah. I don't know. Do we try it again or do we just leave it alone? Do we think today is a pullback? Look at the volume creeping in here. Yeah, if I try to get along again, it's going to put me in a position where the gains that I'm getting off of Bonk, I'm going to have to close out Bonk. And let me try to get long on Penguin. Otherwise, they're just going to offset each other if they trade offset. Hang on a second, though. I mean, you still haven't hit that oversold on that 30-second. I'd like to see that be massively oversold. That would be much better. The sellers have been in control of this for a while, since all morning, really. Because where the buyers last night were not even allowing this thing to hit oversold levels on the 1-minute chart. Like, buyers were just, demand was creeping in. Like every time you hit a 1-minute oversold level, it was a buying opportunity. Not so much. Here recently, the sellers have been in control. With deep pushes into oversold. But this could be it. We'll see. Give it some time. I mean, you don't have to rush into any trade ever. Please. You never have to do that. Risk markets pulling back, but still trading above VWAP. We got fresh all-time highs. We got expansion candles on the daily time frame. Apple, Tesla, both of them are trading under intraday VWAP, and Nvidia is under intraday VWAP. Okay, so the only one that's maintaining VWAP on an intraday basis is Microsoft. It could lose that. If it loses that, then you could see a deeper correction on the ES and NQ futures. If you get a deeper correction on the ES and NQ futures, obviously it's going to be a difficult buy because you're at all-time highs. Like, right? What kind of news do we got coming up this week? I don't think much, right? We're going to have a speech on Tuesday, but that I don't expect nothing there. Nothing. Not really nothing here. You got an interest rate decision on ECB. That will affect ES and NQ futures. But not a whole lot of news on for the US this week. So we could just be setting highs or lows on some of these for now. We'll see what we get later. This thing is down. It's back down to 15% up on the day. So it was up at 26% on the day. So it does look like the sellers have taken over it. That's that low there. Yeah, I'm not going to look for every 5-minute low. Let's just do this. We'll see if the buyers can at least defend that. If they can't, then there's no point in buying it, right? Excuse me. So right here is where we want to see the buyers show back up on Penguin. If they do, then maybe we'll get interested in it. Bonk. I mean, I could, in theory, take profits. This is not today's VWAP. I don't think so. It isn't. Give me this right here, please. Thank you. This is going to be green. Oh, that's all right. I don't need that. Let's change its color. So that will be green moving on from there. Okay, so nice. Liquidated everybody up to the London session open. So now it could literally reverse and go up for the rest of the day. Have we done that on Penguin as well? Yes. Okay. This will be my line in the sand on Penguin moving on, because I'm about to exit the stream. I gotta eat. But moving on, if this can hold, I might even buy it there. Because that's your two. No, here's your 2 o'clock open on Penguin. Damn it. That's your London session open right there. So Penguin could go lower. But on Bonk, you got the London lows. That's your London lows. So anybody that bought Bonk at the London session, they're out more than likely. I don't have a big enough position open on it to take profits. If I take profits, it's literally going to keep me in the trade for nothing, really. So since I've already made a decent amount of money, I'm just going to leave it the way it is. If it gets back up above that midpoint, then I'll just get out. Or I could just get paid now, take the $300, and then just look for another position on it later. Like if the sellers can hold the demand, or if the sellers can hold the price down. Because this would have been a good swing trade. I should have put on a lot more size there. Or not a lot more, but a little bit more size there. Because then I could just take profits and move my stop to break even. And leave it on for any downside continuation that may or may not show up. Yeah. I have a decision to make. I'll make it after the stream's over. All right. And I would need it 6 times a week to at least become a trillionaire. I hear you. I'm scalping these days, only working on Bitcoin. Nice. Owning. Gotcha. I figured out what you were trying to say. Yeah. Scalping Bitcoin isn't all that great because of the fees and the fact that it doesn't move as much as it used to. It's moving nice nowadays. Well, it didn't for like a week or something, but you know what I'm saying. Like it moves more than 1% per day. So you can still do scalp targets on Bitcoin for like 50% or 0.5%, sorry. Moves you can aim for easily on Bitcoin. On good days, you can get 1% target profits. The problem that I have with Bitcoin, or at least on weeks, is it's expensive. It's more expensive for me to trade Bitcoin than it is for me to trade these alts, as far as fees go. And those alts move a lot more, right? So it's like, it's almost like it doesn't make much sense to trade Bitcoin every single day now when we're seeing such good movement in the altcoins. Now, when alt season diminishes or whatnot, or ends, then I'll go back to trading Bitcoin mostly, because your alts will dry up. They'll dry up and liquidity will get spotty and you'll see very small ranges and all that garbage, right? As of right now, they're flying because it's alt season. Everybody's trading them right now. That's why they're moving so good. So I definitely want to partake in that. But I have plenty of cash on the sidelines if I want to add positions or do positions in Bitcoin as well. I have no problem taking positions on Bitcoin. I trade everything the exact same way. Something I did want to look for before we wrap the stream up, though, is our trades that we're holding in FXI and the options trades that we're in. We're holding a trade in FXI. It's not really doing anything, but it's a slow mover, so we're okay. This is our target. It still hasn't hit it. And I told you last week that it would probably be, you probably wouldn't hit it for a few days because it's such a slow mover. If it starts to head back down and for like gap fill, I'll just take whatever little profits I have in it and get out because it's such a slow mover. I was actually looking for a continuation move. We did take out yesterday's high or Friday's high. So I'm not going to close it today. I want to see what it does at the close. If it closes strong today, I'll keep it open because there's a good chance that we could see a gap up tomorrow. But if it closes like red or under Friday's open today, then I'll probably exit the trade. Because if it closes under here, since we've already been down there today, if it closes under that, then that means we might see a gap down tomorrow. We don't want to be in this overnight if we get a gap down. We want it to go up. So if it's going down, it's going the wrong direction. It's a fresh breakout, a fresh sideways consolidation above the breakout and then go. So we want to see that upside continuation take off from here. And right now we have upside continuation as it is a trending candle. You are trending higher. So today's close will be important whether or not I hold that. And then Intel just isn't doing anything. We'll probably take a FOMO trade on, not FOMO, but YOLO trade on Tesla tomorrow. Intel is just struggling. It's struggle city. If it can hold on the close today, Friday's open, I'll hold it. I'll keep it open. So if you're listening to my voice and you're holding Intel longs on options, if you close under 23.22 today or close to the close, if you're trading well under that, you might as well close it. Earnings is coming up on this, but I mean, you can do whatever you want with it. It's your money, always. Their earnings are hit and miss. It's not a guaranteed victory or anything like that to hold until earnings. And earnings is Thursday. Post market though, so you won't know until Friday whether or not you did a good job or a bad job. That's why I hate trading around earnings unless it is just a YOLO play, which we will take on Tesla. I don't mind taking a couple YOLOs a year on Tesla because I'm usually only risking $50. And what's $50? Nothing. If there's a potential to turn 50 into 500, I'm in. Like, sign me up. Absolutely. And Tesla does move good on earnings. We've done these YOLOs on Tesla many times. They don't always pay out, but sometimes they do. Depending on your risk limit and how much you're willing to risk will also determine the probabilities on the trade, where your strikes are. 390, that's a huge move. I don't see it happening on earnings, but it's a possible move. Depends on if they hit good or bad. Right? We've seen earnings trades play out nice in the past. It's still going to be midpoint of this range right here. So just to get your strikes a little bit out of this triangle would be better, but unfortunately, just to do that, your strikes are going to be very expensive because Tesla's a very expensive asset. So it's just a YOLO. It's just a, here's $50 market. Let's see if I'll be right. Right? That's all it is. So we don't care if we lose it. That's the point. It's a bet. It's a gamble. Yeah, the alts you focus on have been blessings, so I can squirrel Bitcoin finally. Yeah, that's the thing with Bitcoin. I like holding it long term in a cold storage wallet, and just I'm doing better on alts. Do better on alts if you're doing better. It's alt season. It makes more sense right now to scalp around these big movers than it does to be scalping around Bitcoin. Now, in a bear market, scalping Bitcoin is fun because Bitcoin can move 10% in a day. But we have alts on the watch list over here that are moving 10% in a day almost every day. Like Fartcoin, it's up 10% right now. So Fartcoin on average will move anywhere between 5 and 10% every single day. Look at what it did Sunday. Like Sunday, the open up to the high of day is a 7% move. That's on a Sunday. On a Sunday, you got a 7% move on Fartcoin. That is fabulous, dude. I don't love these things for buy and hold. Clearly, it's a meme coin. It's called Fart Coin. Like, how good is it to buy and hold? Well, it has been a good buy and hold. I'm just saying its utility is useless. It's a speculation vehicle only, and it is a great intraday speculation vehicle. That's also why it chops so much, because you've got so many day traders in this thing. Loving it. Loving it. And then Bonk and Penguin, obviously Penguin's the big mover today, but it's a big mover intraday as well. Yesterday, it was 6%. Bonk, yesterday, 9%. That's a big mover. Big mover. Yeah, I love it. All right, so that's all we have on the stock right now. I haven't found a position that I love to take a new trade. I want to find one. If you know one that is a setup, FedEx is on watch. I put FedEx on watch because it's struggling, but it's looking like it's going to continue lower. I was wanting to watch it to see if Friday was a trap, is what I was looking at, right? Because it's on elevated volume. It's not super huge elevated volume. It's actually normal volume on Friday, but we're not seeing an increase in volume today. So it's not looking like this was a trap. So basically what I wanted to see today was, is it gapping higher? Because if it was, then we could have potentially looked to be a buyer in a day or two for an upside continuation move. It still might show up that way. And FedEx options are good. FedEx has weeklies and the spreads aren't terrible. They're a little wider than I usually like, but they're like within 25, 30 cents. So that's not anything over 40 and I get really iffy. But it's because that's a $40. Like, that's a lot of money that you could lose on just the spread. Just by entering the trade, you could simply lose $40 instantly. I don't like things like that. That's too much of a no go for me. That's 40 in and then 40 out. You could potentially lose on that if you get nailed with the wrong side of the spread both times, which is likely. But if it's under 40, I'm okay with it. And FedEx is under 40. So we might be able to put on like a put spread or something like that. If it does give us a clear signal here. And when I say a put spread, I mean we'll sell puts. A put spread, we will be sellers of a put spread. Because they're expensive. So there's a myriad of different trades we can take here if it sets up. So that one, O'Reilly set up, but I missed it. It did set up for us and it's breaking out today. I didn't get positioned on it. Pepsi is trading back under our target. So that's good that we closed that. Right? Because I would no longer be in the money. I'm glad I got out of that when we breached up here. It makes sense that it would pull back this close to the early opening range. So what we're going to do is we're going to give this time to fill the gap and bring this moving average up to us. And then we'll keep an eye on Pepsi, because if Pepsi does what I think it will do for the rest of the year, then we want to basically let this do its little pullback moves, so that way we can look to be a buyer, right? We want to look to trade this on the way up. So that's what we're going to keep Pepsi on watch. But I haven't found anything else yet that I'm looking for. But as soon as I do, I'll let y'all know. I do want to learn how to do the tasty trades, so I'll be here anytime you go. Appreciate your commitment to it. It's nothing. It's just learning options, more or less, right? All you got to do is open an account. It's just knowing options. You just got to know how they work, how they're priced, how people lose money. Don't learn to do what they're doing, just learn why they're losing money and then avoid doing that. Like, do you guys understand that there was a thing that just came out not too long ago, last week, I think, that said over 99% of 0 day to expiration options are retail traded. 99%. You take into account that 90% of retail loses money, and that should tell you to stay far away from 0 days to expiration options. Now, I'll use them from time to time, but that's only if there's a significant amount of momentum. Like if the S&P 500 gaps up or down, mainly up, not down, up. If it gaps up like 3 or 4 standard deviations higher, then I'll go another standard or 2 deviations out of the money and sell it. On the gap downs, you got to be careful, because if you're going into a bear market, you can see downside continuation. You get ran over fast to the downside. But downside usually will sell options because the premiums will be insane. The premiums will go jacked up so bad to where you can just go way out of the money and sell a week-long put. And as long as prices don't continue to go lower, you can catch that expiration and make money on the expiration. It's just learning options is all. I don't really trade the fast movers because I'm scalping futures. Like, my main job as a trader, if you were to say, tell me what it is that you do mainly, I am a futures scalper. That's what I do mainly. So in my main account, I'm scalping ES futures. I stay away from NQ because they're too quick. On the small account, I will scalp futures or options on futures. When it comes to stocks, I mainly am a buyer and holder of a longer term option. So like Pepsi, we bought it. It worked out in a week or two, right? That's generally what I'm looking for on the options on stocks. I'm not looking to buy a 0 day. A 0 day is useless. 90% of 0 day options expire worthless. You have to be right that day. Like Pepsi, we didn't have to be right that day. As long as we were right before expiration, we made money. We bought it down here. We got a liquidation break. We got lucky. It moved in our direction pretty quickly, but it still had to go far to get us in the money. We would have made money here. This is where our original or first take profit was, but this up here was in the money. That means the option was much more valuable. So we paid $4.50 for the call down here. We were looking to sell it for $6.50 here or sell it for $3.50 here. But we ended up selling it for like $9.50 or $1,000. I can't even remember. It was a lot more. But we more than doubled our money on that. And we sat in it for a while it did nothing. But by buying longer dated options when they're fairly priced, you can set in them for a long time. You're not losing much on theta decay. So if you do get an explosive move, which we were looking for, earnings, then you do good, right? You get that explosive move higher and you're good to go. So that's what I like doing. I'm more active on the futures. That's why you see me scalping on crypto futures, ES futures, stuff like that. That's where the scalps be. But yeah, we'll wrap this up. You guys have a fantastic day. We'll see you tomorrow. As long as everything goes smoothly, I will be back tomorrow. Make sure you guys trade safe for the rest of the day. Make sure you trade smart. And as always, happy trading, everybody.